as Caroline said, in association with Kerry PPN and the Wheel under the Training Links programme. Just before we kick off, I know some of you from previous workshops and from previous business we've done in the past, but just so everyone knows who's on the call this evening, if you can maybe just ask for a very quick introduction to who you are and the organisation you're with, if that's okay. So, John, could I start with you? You're next to me there on the screen. So,
right, that's me, is it?
Yeah, John. Yeah.
Yeah, John Spillane, Kerry PPN Secretariat, and got to there through the Kerry Star Special Olympics Club.
Thanks, John. And Catherine.
Hi, Catherine Casey, Adapt Kerry Women's Refuge, General Manager. Thanks a million.
Thanks, Catherine. And Joan. You're on mute there, Joan.
Sorry about that.
No
but I have a cough and I have to mute myself from time to time.
That's fine.
I'm Joan Murphy, Tarbert Development Association. I'm Secretary.
Thanks, Joan. Appreciate that. And who's next? I don't have their name. Sorry, just to come Cushta Gaeltacht.
Cushta Gaeltacht Ibrahig. It's Anne Boland. I'm the Banistor of Cushta Gaeltacht Ibrahig.
Hi, Anne. Thank you. And Sharon.
Hi, Tom. Hi, Caroline. Thanks a million for this evening. So, Sharon, you're still right this week here. Busy planning winter series programs at the moment and competitions about to release and planning for June 2022. Hopefully, all going well.
Brilliant. Fantastic. Thanks, Sharon. Bettina.
Hi, I'm Bettina Pickering. I'm here for the Castle Gregory Community Council and also Castle Gregory Tidy Towns.
Great stuff. Thanks, Bettina. And Neil.
Hi, Neil is my name, and I'm from Tralee National Resource Centre. So this is my first time at this particular meeting. So I'm here to learn and read that. Thank you.
Thanks, Neil. And Garrod.
Hi, Garrod O'Shea from the Community Council in Camp, Secretary.
Thanks, Garrod. And Aisling.
It's actually Brenda, but my daughter must be clicked onto it. But my name is Brenda Enright. I'm treasurer of our core here in the Stole for this past year, so I'm kind of new to this now as well. So hi, everybody.
Thanks, Brenda. And Stephanie?
I'm muted. No, I'm not. Perseverance Community and Business Alliance. I'm also a PPN Secretariat.
Good, thank you. And that's Martin. You're on mute there, Martin.
Yeah, Martin Mulvihill from my van LGFA and also involved with my van Development Association.
Good, thanks, Martin. And Anne-Marie.
Hello, everybody. I am the chairperson of Kerry Steelman Energy Co-op, and also I'm on the PPN Secretariat as the environmental rep.
Very good. Thanks, Anne-Marie. Is that everyone, or am I missing someone?
Yeah, I don't know if you can hear me or not, but I'm Pat Sullivan there from Banan Heritage Park and also representing Banan Community Council.
Thanks, Patrick.
Yeah, lovely.
Very good. Okay, I just want to share the presentation there with you now for this evening's workshop. It's okay. And as Caroline said, it's been recorded, but it'll also be sending you out through Caroline and Eamon there the slideshow for this evening and some templates that we use as well that I'll be discussing as we talk through the presentation. Just, can you all see that, yeah?
Yeah.
Yes. Okay, so just for those who don't know me, I'll give you a very quick brief introduction because most of you do. So Tom O'Leary is my name, O'Leary Associates Training and Consultancy Limited, based in Tralee. My own business, I work, I suppose, with both startup businesses, small businesses, private businesses, but my majority of my work is working with social enterprises and not-for-profit organizations as a consultant, mentor, and trainer. So most of the work I do is around feasibility study analysis, community planning, strategic and business planning, mentoring and training. And a big part of what I do is working with organizations like yourselves on accessing funding, grant applications, writing applications for grants and for social finance. So I suppose since 1998, I've been working with groups primarily on these areas. And a big part of what I suppose the groups that I work with, the biggest struggle I suppose they have is financing their projects and sustaining their projects from a year-to-year basis. So what I do through these training programs is basically give people yourselves the kind of, I suppose, an overview of what's involved in financial planning. But from a consultant's point of view, in terms of, I suppose, what we do to identify where the funding sources are for groups and for organizations, and then how to actually source that and get those funds in place. So a big part of what we're going to discuss this evening is the initial stages of looking at what your cost base is, look at your cost analysis, understand your costs and what you actually need to bring in every year to fund your projects. We'll also look at new project development in terms of any new projects you want to develop over the next year or next couple of years. That might be a building project, it might be an extension project, it might be just developing new services or new facilities or new programs or whatever it might be that requires funding. And I'll outline where that funding might come from. And then we'll just go through the various different sources of funding that are out there at the moment. Everything from your own income that you would generate from fees to looking at grants, looking at fundraising, and looking at sponsorship. There is further workshops in the new year that specifically focus on grant applications and writing grant applications. But this evening, I'm just going to give an overview of the kind of cocktail of funding that's out there for organizations like yourselves operating in the not-for-profit sector. So basically, the purpose really of financial planning, like we do a lot of work, as I said, with groups, but we also do an awful lot of work with private companies and commercial businesses on their financial planning for the year. And I suppose the same issues come up with both not-for-profit and for-profit organizations in terms of, there's money going out constantly to fund your operations. And there also has to be money and income coming in to make sure that money is covered. So there's a constant battle there with businesses, whether they're for-profit or not-for-profit businesses, to kind of make sure the books are balanced every year, and to make sure that the services you provide, facilities you provide, or the programs you provide are sustainable. So a not-for-profit organization, as I said, it must think like and act like a for-profit business when it comes to sustainability. So even though you're all from working within the community and voluntary sector, you're all focused on social objectives in terms of providing services within your communities. You have to start thinking like a business does, so about survival and about how do I bring in enough money to cover the money going out. So a big part of what we do in our financial planning is understanding cash flow. So it's understanding where your business is at or where your organization is at in terms of cash. Are you struggling every year to meet the needs of the organization in terms of the operational costs? Are you constantly struggling to fundraise? Are you constantly chasing grants just to survive? And are you just living kind of month by month, like a lot of organizations are? That's not sustainable long term. It leads to burnout, it leads to a lot of frustration, a lot of volunteers that are feel responsible for keeping everything going, and becomes more and more difficult every year. I'm not saying it's easy if you've got a plan in place, but it certainly is an awful lot easier if you've got a plan in place. So the key thing really with any business, whether it be for profit or not for profit, is that there has to be more money coming in than going out. Now we all know that from when we were young, when we had pocket money, you can't spend more than you had. We all understand it from a household budget perspective, where we all understand about the needs to make ends meet every month in terms of money coming in, money going out in the house, and you're trying to constantly struggle with that in terms of making sure you have enough coming in. With a business that's for profit, they have an advantage over you because they can go out and sell more. They can just drive more sales, work harder, up their prices, bring in revenue that way. As a not-for-profit organization where you might have an income stream coming in, you've got to rely on external funding like fundraising or sponsors or grants to keep everything going. So it is a lot more difficult within the not-for-profit sector because you just don't have that guaranteed income coming in every month from sales. But the key thing, and I think I said this to you before, if you were on the strategic planning workshops we did last week and the week before, although I work in the not-for-profit sector, I focus those organizations on making a profit. So, the key thing I always say is that you might be not for profit, but you're also not for loss. You're not there to lose money. You're there to make money. You're there to generate enough revenue to keep everything going. If you're operating on a break-even basis, where you're just literally bringing enough in to cover what's going out, that's a very risky space to be in, because if funds are down, if fundraising is down by 10, 15, 20%, if your grants are cut by a percentage, you're now in a situation where you're not able to actually keep the organization going. you need to look at bringing in as much revenue as you possibly can, to have a reserve in place that allows you to reinvest back into the organization, reinvest back into your community, to have money aside just in case there's an issue that's not being budgeted for, like a leaking roof or an oil burner breaking down, or staff member leaving and you got to replace them. All these things. There's always these unforeseen costs that are out there every year for every organization. If you don't have a reserve in the account to cover those things, you're going to run into problems. So always focus on trying to generate as much money as you possibly can. So if you're fundraising, you're making a lot of money, don't stop fundraising, keep fundraising, keep going with it, because you always need to have that reserve in place. And if you don't have that reserve in place, you're just at risk of not being viable long term. So what funding is needed for? For the first thing, I suppose, operational costs. So covering the money that's going out. So covering your utility bills, your insurance, you might be renting, you might have staff, you might have equipment costs, maintenance costs, materials costs of running various different programs, etc., etc., etc. So all the things you're paying for every month, that's what we consider operational costs, and you got to find money to cover those. You need to have a reserve policy, as I said. You need to look at what's going, what you need to have in reserve, just to allow you to function if things go wrong. And normally groups will set a target for that. Depending on the funding they get, if they're getting core funded, there might be stipulations with their funder that they have to have a minimum reserve in place. If you don't have those stipulations in place, you decide yourselves as a board or as an organization what our reserve target is going to be. So how much money do we need to reserve each year in the account? What's our target in terms of bringing money in? Okay, you might want to develop new projects or new programs. That might cost money to look at the analysis stage. So there might be feasibility funding available to you to do a feasibility analysis on a building extension or developing a new program or whatever it might be. So there's a cost associated with that. And then there's a cost associated with developing a project. So if it's a building project, obviously it's construction costs. If it's a program, so for example, like Writers Week or a festival, there's going to be programming costs there in terms of getting the activities funded, getting equipment in, booking venues, booking events, marketing costs, all these things. They're all one-off program costs that might come up annually if it's an annual program, or you might be just developing a one-off program that requires funding. So what we try to do is we split the operational funds that you require for your organization, the kind of everyday things you need, keep them separate from your project funding or your program funding, so your one-off funding. If you mix them, if you include your new projects into your existing operational costs, what you find is that your new projects will actually start kind of cannibalizing your funding for your ongoing running costs. In other words, your money that's in your account to cover your ongoing running costs start to subsidize your new projects. And that's where you're going to create problems. And that's what happens to a lot of groups is that they kind of expand and develop new services, new facilities, new programs. And it actually swamps them. It brings them down because they can't maintain the new costs. They can't fund those new costs through existing strategies and financing. So what we look at is if you're developing something new that has to be able to stand on its own 2 feet, it's got to be viable on its own. Okay, cannot be reliant on being subsidized by existing operational costs. Otherwise, you're going to run into issues. Maybe not the first 12 months, maybe not the first 2 years, but certainly long term, you're going to find that it's going to start eating into your reserves. It's going to start eating into your operational funding. So what we use is basically, I suppose, is a cost analysis program with our groups we work with. And the key thing we do is we look at, before we look at planning and look at financial planning, we look at, what do we spend the money on? Some groups are very kind of good at administration. They keep proper records. They've ongoing bookkeeping. They know what's going in. They know what's going out. Other groups are not, or individuals, if it's businesses, they're not maybe as good. So not really too sure what they're spending money on. They don't review their costs on a regular basis, and therefore they might be getting best value for money. So we did a lot of work over the years with, say, community facilities where they were spending an absolute fortune on light and heat because their buildings were old, they weren't well insulated, and they weren't very efficient. They went off, got energy audits done on the building. A number of recommendations came back in terms of how to improve their energy efficiencies. They went off, sought funding to get those renovations done, and they saw maybe 40%, 50% decrease in their energy costs and their utility costs. Replacing normal lights with LED lights, for example, even though there's a kind of initial capital cost in doing that, there's huge savings both from a cost perspective and then from an environmental perspective long term. Groups not reviewing their insurance policies, not shopping around for best value. Groups not shopping around for the best on broadband deals or telephone or mobile. Just spending money, every year kind of automatically without questioning why they're spending it. So I have a few questions I ask groups that I work with. If it doesn't add revenue, I would question why someone is doing something. And what I mean by adding revenue, if you're, say, developing a new program or new service or a new facility, is that going to generate and bring in any additional revenue? Maybe through fees like rental, maybe through further grants because it's a new program that might be grant aided, or is there potential to maybe get this new program sponsored and getting new sponsors? If it's not adding any revenue to the overall organization or the overall project, you question why you're investing money in it. Now, if it's a service you need to deliver because your community wants that service or needs it and there's no one else to provide it, and you feel that you're best positioned to deliver on this, that's different because now you're doing it because there's a social objective there, but there has to be some way of funding it. So that's when you start looking at, okay, well, if we need to do this, someone's got to fund it some way, whether that be through grants or whether it be through fundraising. But again, we'd always ask the question, is it going to bring in additional revenue? If it's not, you question why you invest in it. If it doesn't benefit the strategic direction of the organization, again, I'd question it. So that's where a lot of organizations, they chase grants. They see a grant opportunity coming up. They see it as being basically free access to money. But the project the funding might be for specific projects that isn't really relevant to that group. So they're now moving away from their core responsibilities, or their core business, or their core objectives, and they're bringing in an additional kind of element just to avail of a grant. There's nothing fundamentally wrong with that. Only it can cause problems where you're now spreading your existing resources thin on the ground. So, for example, if you're bringing in a project that's not really relevant to what you do, but you see there's an opportunity to make money out of it, ask yourself the long-term question: when this initial funding is gone, so this initial grant is gone and spent, what will this new project cost us long-term? And it's going to add to our operational funding. So again, we would have often stopped groups from going after grants because, look, it's not in your best interest to go after this money. Yes, it's there, but it doesn't really make a difference to what you're doing because it's not relevant to you. So, we'd always look at, if there's a relevance there, absolutely go for it. If there's not, don't start creating projects and programs just for the sake of getting a grant, because once you create it, it will be funded initially, but it won't be funded afterwards. Okay, so just bear that in mind when you're looking at new project development. If it's not, if it's not really needed, I'd question it as well. When we do grant applications for groups, we can ask the question, well, why are you spending, X amount of maybe hundreds of thousands of euros on a project? Can you justify there's a need for it? Have you done the analysis? Have you done the consultation? Have you done the planning? Have you done the feasibility study to see if it's actually, required and needed, and if it's, sustainable? There's a lot of buildings all over the country that were built over the last 20 years that are empty because there was never a need for them in the first place. It might have been a good idea at the time. Some committee might have been formed to say, yeah, we really need this in our community. They went off and built it, and the building's empty for maybe 80% of the week because no one's actually using it because it wasn't actually needed. If you're investing substantial money in a project, if it's not needed, it's a waste of time, energy, and a lot of resources. And that's when you're looking for funding, they will look for that rationale behind the project. Why are you looking for this money to do this? And if you can't prove it, then you won't get funding to do it. If it's additional one-off funding, so again, if it's a one-off grant, ask yourself the question, would this lead to additional administration costs in terms of doing the administration for the grant, and will it add to our operational costs? So the example that I always give is the group that gets a bus donated to them, or they get it sponsored, or they get a grant to purchase a vehicle, which is fantastic. New vehicle, new bus for the local school, new bus for the local active retirement group, new bus for the local youth club. The bus is funded, but the question is to be asked, who's going to drive it? Who's going to pay for the driver? Who's going to pay for the diesel to go into the bus? Who's going to pay for the maintenance? Who's going to pay for the insurance? Who's going to pay for tires? And those questions are never asked. And then the bus is there sitting in the yard, and they realize, you know, it was great to get it, but we can't use it because we can't pay for it. So if it's going to add to more cost long term that you can fund or you can't find funding for, then don't go off and purchase, or don't go off and actually develop it. So my job really with working with groups is kind of act as that kind of sound, objective voice of reason in some cases, to say to someone, stop, this is just madness, it's insane. You know, you're investing serious money here where there's no real long-term benefit, and it's going to be massive long-term costs for you. Also, when you look at a cost analysis, ask yourself the question, do we have to spend money on this, or can we get this through like in-kind support? So an example of that would be where a community facility, for example, it might need to be painted. They gather maybe a team of 10 volunteers who say, look, we'll volunteer, we'll paint the building. They go to the local builders providers and get paint sponsored. So instead of spending, you know, a couple of €1,000 on getting the building painted, they're now doing it for free. You know, there's you know, people going out there looking for equipment, looking for furniture, looking for whatever it might be. If you can get that sponsored or donated to you, that saves you money. I know a lot of web design companies will do websites for free for community volunteer organizations. Again, it's a savings cost that doesn't need to be incurred by you. So where you can, look to get in-kind support and reduce your cost base. So look, it's like any house, you're always looking to reduce your costs as much as you possibly can, so you have less money going out, okay? So just be, you know, go back through your annual accounts, look where you're spending crazy money, see if you can reduce that down. And as I said, when you're analyzing future funding and future spending and future projects, look at the viability of them after they're funded, okay? You always get granted to develop something new. You won't get the grant to sustain it afterwards. They'll always ask, can you sustain this project after we fund it? That's why every application form has a section on sustainability, because they want to know how you're going to sustain this project after you fund it, after they fund it. So they'll always ask about your fundraising capacity. You know, have you got a track record in fundraising? If you haven't fundraised €1 in 10 years, there's not a hope that they're going to give you grants to develop a project that you can't show you've got the capacity to sustain it afterwards. Okay, so this kind of a think, you know, we'll build it and they'll come sort of thing doesn't really work in reality. You got to make sure that, you know, if we build it, we know they're going to be there because they're already there waiting to get in the door. Okay, it's not a case of let's hope this works after we fund it. You know, that's not the way to go out there and develop projects. And that's why it's really important you're planning that you factor those things in, not just next 12 months, but the next 3, 4, 5 years, what the impact is going to be on your costs and on your cost base. So this is a budget or a cash flow forecast or income and expenditure forecast, whatever you want to call it. Now, people kind of sometimes they get sick when they see things like this because they don't like finances, they don't like spreadsheets, and they don't like numbers. And to be honest, I don't like spreadsheets and I don't like numbers either. But they are something that you have to do. This one page here that's in front of you, if you've got something like this and you use this as a planning tool, you will be in a way better position going forward looking at your financial plans, okay? So what we normally do, and this is, again, what we do with businesses, for-profit businesses and for not-for-profit businesses, and you've all possibly maybe seen one of these in the past. If you haven't, you've seen it all for the first time, and it's not overly complex. So the first thing we look at is the expenses. Now, we don't bother with looking at, say, annual costs. So we don't, let's say, in 12 months, we're going to spend, you know, €4,000 on insurance, or we're going to spend, you know, €8,000 in utilities. You need to look at the breakdown on month-per-month basis. That's really important from a planning point of view. You don't plan 12 months in a summary 12 months. You plan 12 months per month because you need to know when the money is going out, which is really important because certain times of the year, you're going to have higher costs than other times of the year. So, for example, if we take the store wives there with Sharon, you know, like when Sharon is looking to develop the programming and looking at developing the Writers' Week in when it's been run for the week or whatever, there's going to be higher cost that week than it will be in other weeks. If I'm working for a youth organization and they're running summer camps, for example, right, or Easter camps, there's going to be higher costs when they're running those camps than will be when they're not running those camps. Your utility bills are going to be higher in the winter months than in the summer months. All these things. So you need to look at when are your costs going out, and when are the months that are, you know, are heavy in terms of expenditure. So what months do we have a lot of money going out of the account to cover various different bills and stuff. So what we look at doing is we look at things like, say, professional fees. Let's say your accountant is charging you €2,500 per year to do your annual accounts, do your returns to revenue, and whatever reporting they might be doing for you. Especially if you've got a company limited by guarantee, there will be substantial professional fees in terms of accountancy fees with that. So rather than being landed with a bill in November from your accountant for €2,500, look at seeing can you spread that over 12 months and set up a direct debit with them over 12 months. So you're paying a lot per month rather than kind of one large cash, cash outgoing in 1 month of the year. Your insurance the same way. If you're looking at fairly large insurance costs, talk to your broker about paying that off monthly rather than paying it as one bill. Again, just spreading your payments, because it's all about cash flow. So the more you can protect your cash flow, and the more you can stop large amounts of money leaving the account at any one time, the better it is to manage your finances throughout the year. Okay, so you're spreading the cost over the year rather than have any kind of big month where there's big hits there. So if you've got staffing costs, and some of you might have staff costs, again, that's a monthly cost. That's fixed. That doesn't change. Your rent, if you're renting a premises, fixed, doesn't change. Most of your utilities are fixed as well, like your phone, broadband, they're all fixed. Your light and heat will actually go up and down depending on usage, obviously. Your loans, if you've got loan repayments, which a lot of organizations will have or do have, but if you're looking to develop new projects, you certainly will have, because you need to have bridging finance and bridging loans. So as loan repayments come out every month, you might buy materials for professional fees like legal fees, accountancy fees, repairs and maintenance, equipment costs, and then like your office costs. So you can add in as many or take out as many as you want. All of this is just an example, but the key thing is understanding what you're spending every month. So if you're, say, a Titled Towns group, and there's a couple of Titled Towns groups on here tonight, you might think, well, some of these things are relevant to me, but they won't be. Like, you're going to have like material costs, you're going to have insurance costs, you're going to have every group, no matter what you're doing, will have the costs throughout the year. So you got to identify when are these costs coming out, okay? And the reason why you want to identify when the costs are going out of the account is because you need to make sure there's money in the account to cover it, okay? So there's no point realizing when you're having a committee meeting on a 8 o'clock or 9 o'clock in the middle of the night, in the middle of winter, and someone brings up, geez, we got a renewal bill there from the insurance company and it's €3,000. And someone says, who's got the bank statement? The bank statement is produced, and the bank statement shows there's £5 or €5 in the account, and there's panic, because there's not enough money to cover it. That's bad planning. That's the type of person that goes to the ATM machine and says novena before they put the card in, hoping there's money in the account to cover what they're spending. You need to know what's happening on an ongoing basis, because you don't have the capacity to generate money very quickly. So if you've got a bill that needs to be paid, you can't go to tomorrow morning and raise money to pay the bill. That money has to be in the account to pay for it. So knowing when that bill is due leads you up to the point where you have the money in the account to cover it. Okay, so if we're going on holidays in September as a family, I don't wait till like the end of August to figure out how I'm going to pay for the holiday. It's too late then. I don't wait till December, what's the date? December the 14th or 15th, whatever it is, to figure out how I'm going to spend, get money in to pay for the Christmas presents and everything else next week. Too late. You plan in advance to make sure you got money there to pay for all those things. And that's why it's so important to plan. And that's why this spreadsheet or this cash flow template is really, really important, because it shows you when the money is going out, and it shows you when the money has to come in. So on the top line here, this is your income. So we break this down into your source of income. So you might be generating fees. So you might have a community center that you're renting out rooms. You might have might be like Meals on Wheels, it might be transport, it might be whatever it is that you're doing. You might be charging for some services. Those fees might vary throughout the year depending on what you're doing. So there might be some months that are quieter than other months, etc. Your fundraising, most you're going to be doing some fundraising. Some will do probably called panic fundraising. So they fundraise when they need the money. That's a disaster. There's too much pressure on you. You need to fundraise, have a target set for your fundraising every year, and decide what you're going to do and when you're going to do it throughout the year. So that could be 2 fundraisers per year, it could be 4 fundraisers per year, it could be 1 massive fundraiser per year. It doesn't matter. You need to plan in terms of when that fundraising is going to be done. And ideally, you want the fundraised money to be in the account to cover when it's going to come out down here. Okay. Sponsors, again, something we talk about later on. Rather than maybe getting like one lump sum payment in from a sponsor, get them to set up a direct debit scheme where they're paying their sponsorship through direct debit on a monthly basis. So you're getting it throughout the year. So it's coming in like a wage literally every month throughout the year. Your grants, you don't know when the grants are going to be, so because they're never announced, a year ahead of time. They're always announced like, number of weeks or months before it. So you basically fill in the grant information when you hear about it. So if you hear there's a grant up in March, you mark in March what the grant is for, the deadline, and you start working towards that grant application probably 2 months beforehand. Okay, so it's all about planning. It's all about looking ahead. Okay, so we do with our groups when we're working with them is we'll get them to do all this analysis down here first, so they know exactly what they're spending over the next 12 months, and then we try to figure out what's their best options in terms of bringing money in up here. So they might be bringing in some fees, but they're not covering enough to cover what's going out. They need to look and say, how do we fundraise and what's our sponsorship we can bring in on an annual basis, okay? But you need to set targets, and you can't set a target unless you know what you're spending. So if I'm working with a small business and they're starting off their business and they say, Tom, is this business viable? I have no idea. No idea on to tell me what their target is. If they say I need to generate 100,000 euros in year one, I'd say no, it's not viable. If they generate 10,000 euros in year one, absolutely it's viable. So it depends what your target is. If your target is based on your costs. So if your costs are 50 grand a year, 20 grand a year, 10 grand a year, 5 grand a year, that's your target. That's what you got to bring in, plus your reserve on top of that. So if someone said, Tom, 30,000 euros a year will run our organization for us, fantastic. 30,000 is the target, plus another, say, maybe 50% on top of that as a reserve, okay, which is what, 15,000 euros. So that's 45,000 euros a target. Now we work backwards in terms of how can that be brought in. Do we look at doing a fundraiser and target 20,000 euros, bring the rest in fees? What way do we do it? Okay, so it's all about planning. If you don't have a simple financial plan, which is your budget, which is what we're looking right in front of us, you're not going to, well, not that you're not going to survive, but survival becomes a bit more complex, a bit more stressful than if you're planned for it. Okay, I'm not saying again that it's easy. Because you've got a spreadsheet and a budget, it makes it easier to fundraise, or it makes it easier to bring in money. It just makes it easier for you to plan when you need to have it. Okay, there's less pressure being put on, there's less stress involved because you're always ahead in terms of knowing there's money there to cover what's going out. Okay, so we've all been there personally, but I presume I have anyway, where you're kind of thinking, geez, do I have enough to cover what's going out next month? That's not a nice place to be. If you're a volunteer and you're responsible for an organization as a volunteer, and you're responsible for other people, and you're supporting people in your community, you're thinking, okay, they rely on us as a committee to make sure this thing is sustainable. That's a lot of pressure. So by planning, you reduce that pressure.
Did you bring in by any chance the charger?
Okay, so so next after that then is your capital projects. So these are, as I said, are separate from your ongoing annual fundraising or your annual costs. Okay, so, for example, if you're developing a construction project, so a lot of work we do is around feasibility studies for capital construction projects, old community buildings, new facilities, new enterprise facilities, things like that. There's going to be cost in getting the plans and everything done. So your professional fees, like your construction drawings, costings, QS costs, planning fees. You're bringing in maybe consultants to do feasibility analysis or cost analysis or projections or whatever it might be. There's a cost associated with that. Though this sort of cost can be covered by, part of them can be covered by feasibility study funding. Other costs like planning fees, for example, won't be covered by grant aid. So those costs have to come out of your own reserves and your own budgets. Then let's say you go beyond this stage where you've now got your plans in place, your drawings in place, you're ready to go, you got a shovel-ready project. You now got to find funding to actually build and construct. And now you're going out there, knowing what your costs are and your fit-out costs are, you're now going out there targeting a grant to cover those costs. Okay, that is separate from your ongoing. Your ongoing is happening anyway. Your new costs that are focused on these new projects are separate from that. Okay, so these are going to be standalone. So you're looking at standalone grant aid to cover, and standalone fundraising and standalone sponsorship or whatever it might be to cover these costs of the money to cover the new project costs, whether it be construction costs or programs, doesn't matter what it is, the same concept. However, after this project is done, completed, it's going to bring in additional costs for your overall project. So for example, if you're adding an extension to your building, your insurance is going to go up, your light and heat costs are going to go up, and your staffing costs might go up as well, because you need to resource that extra space within the building. Now you might say, well, okay, but our fees are going to go up too, because we can generate more revenue from it. But because you're not for profit, it's unlikely that the fees you're going to generate from additional space is going to actually cover the cost of building that additional space. So we're doing a job at the moment with a group up the country, and they're looking to put in an extension to their building that's going to create maybe 4 or 5 spaces for remote workers. So 4 or 5 offices, basically. They'll be looking at bringing in possibly per year. Let's say if they're renting, say, 4 spaces for €300 a month, that's €1,200 a month. By 12, they're bringing in €14,400 in rent for the year, which sounds great. Okay, but the extension is going to cost them $500,000. Okay, so there's no return on that investment at all for them. So there's no point in doing that, because even though it's needed within their community, it's going to cost way too much money. So they've now looked at an alternative, and they're looking at reusing existing buildings within their village. There's an old pub they're looking at, there's an old derelict house they're looking at, and they're going to convert that into space rather than building something brand new, because it'll cost them a lot less. Not won't cost them an awful lot less, but it will cost them less. It costs about half of what they're going to spend. That's what I'm talking about, looking at what your long-term costs are going to be associated with actually doing something new. Okay. So once you've identified your operational costs, you've analyzed them to debt, and you've kind of worked out, okay, we're spending too much money here, there, and everywhere. We shopped around, got best value on all our services and products. You've identified, where you can make some savings. You've looked at your, additional projects you want to develop over the next 12 months. You've costed those. They make sense. They're, you reckon they're viable, they're sustainable. Now you're saying, okay, right, well, where do we get this money from now? Where do we go out there and get this money from? We have our plan. We know what we're spending. We know everything that we need to identify where the funds are going to come from. So these bullet points are basically what we call the cocktail of funding that exists within the not-for-profit community and voluntary sector. Okay, so straight away you can see it's fairly a lot more detailed than a private company would be. If this is a private company like mine, there's one source of funding: sales. From my customers, selling training, selling mentoring, selling consultancy. That's where my money comes from. That's all. I don't get grants. I don't fundraise. I haven't had to yet, thankfully. I don't have any sponsors. I rely on one source of funding, which makes things, not saying it's easy, but it makes things a lot easier when it comes to administration. There's less stress involved because there's one source there. If you're a community voluntary organization, and you're aware that you're bringing in money through all these, like it might be grants, fees, core funding from maybe specific group, fundraising, online fundraising, sponsors, partners, donors, philanthropy, social loans, and in-kind contributions, where you're getting volunteers to do the work for you for free. You're getting donation of materials, equipment for free. Okay, they're all sources of income. Okay, so I'm going to go through them individually. So sorry, in terms of the first one there, fee income. With fee income, you need to look at, can you charge for your service you're providing, the products you provide, the facilities you're providing? And that, it might be obvious, but you'll always look at, is there a way we can actually charge for this? So for example, if you're doing if you've got a building, yes, you can rent out space within the building and generate some fees from that. If you're delivering a training program, if you've got, say, like training links, like the funding from the Wheel that's funding this, there's other community voluntary organizations out there that have created networks to bring in training funds. Can you charge for that training? Can you charge like a nominal fee for that training? Have you services that you can provide within your community that you can charge for? Even if it's at a very, very low fee, can you charge for those services? Can you look at, say, products? So, some organizations have charity shops. So the charity shop sells products, and that generates revenue that helps subsidize the running costs of the main focus of the organization. So disability organizations, a lot of them would have charity shops, or maybe community cafes that they would have that would generate revenue that funds the ongoing operational costs of their organization. Again, you might have membership base, so you might charge membership to be a member of your organization. So, for example, sports clubs will do that. They have an annual membership signing on fee. You know, the academy opens up and they charge the kids or the parents an annual membership fee to get their jersey, their gear included in that. They might also charge maybe €2 per head at the gate on a Saturday morning for training, and they'll bring in money that way on an ongoing basis. You know, there's no reason why a lot of groups can't do that. You can look at a membership, some sort of membership base where you're getting in fees in from there. So every organization, doesn't matter what organization it is, should look at generating some sort of fees if it can at all. Again, a lot of you are kind of in the tourism space. Again, a lot of not-for-profit organizations within the tourism space, you know, community festivals, community theatres, arts groups, arts facilities. You know, they're all generating revenue through programming and through activities that they're providing throughout the year or once off per year. Okay, so that's fee income. The next one is grant aid. I suppose, look, this is an area that everyone's really focused on because it's kind of sometimes the only kind of show in town, to be honest, in terms of survival. There's two types of grants. There is specific grant aid that we would call that are specifically for different types of projects. So it could be like youth projects, disability projects, employment-related projects, environmental projects. You know, and they're very much focused on one specific thing. So you can't just, you know, walk up and say, we're doing X, Y, and Z, when they'll only fund A, B, and C. So they'll be very specific in terms of what they will fund. They might be annual, so they might come up every, you know, once a year, or they might be just one-off, and you know, they might be just a one-off thing, like COVID grants last year, for example, were one-off. Well, we thought they were one-off, they're probably back again next year, but they're going to be for, you know, to get over the COVID hurdle that we're facing at the moment. But other specific grants then will come up on an ongoing basis, but they're very specific for specific projects. You've got annual grants, so some groups are funded through annual grants, like core funding, we would call that. That might be like HSC grants, like Section 38, Section 39 grants. You might have public funding under the Community Services Project, for example. You might be funded under TUSLA if you're a family resource centre. You know, you might fund under a childcare programme. You know, there's all these core funded programmes there that give money every year. Now, it's not to just give the money out randomly every year. You've got to apply for it. You've got to have your, you know, strategic plan, your business plan. You've got to do your returns, reporting back to them to justify why the money is needed for the following year. But it is rolling over funding that's available to some organisations. They're great because they provide that funds every year. However, if you're over reliant on them, it can be dangerous because, you know, it's always a situation where those grants are reduced, or there's cutbacks, or the funds nationally are cut, whether it be for political reasons, or whether it be for budgetary reasons, or whether it be just they want to move some money to somewhere else, or they might be changing the structure in terms of how it's administered. So therefore, it just creates problems. So just be careful if you're core funded, or if you're chasing core funding, which is fine and it's brilliant if you can get it. Don't get over reliant on it. Always look at the other alternatives as well to bring in additional money. Okay. The basic steps for grants, and again, there's a workshop on this in the new year on how to apply for grants. So what we do when we're working with organizations, specifically around grant applications, is we'll research what grants are available for the type of project. So we'd see what grants are out there that are relevant. That's the key word there, is relevant to the project. We get a lot of inquiries from organizations about grants that are completely not relevant to them. And it's a complete waste of their time, my time, and the person who's assessing the application's time, because they're just not applicable. So we look at what grants are available. We look at the deadlines. Deadlines are very important because the deadline that is set isn't going to be moved. It's not going to be changed. And you might not be in a position to actually be ready for the deadline. So, for example, if you're applying for funding for equipment or capital works, you don't have any quotations got, you don't have any kind of, you know, needs analysis done, you know, you don't have any of the kind of the required documentation they need for the grant, then you're just not going to be in a position to actually apply for it. So like the financial planning, grant planning is really important, that you're ready for grants when they become available. We always focus on having shovel-ready projects. So shovel-ready projects are literally projects that are ready to go straight away, that you don't need to be kind of, you know, having to try and find and develop them after you get granted. So if a government department has got a budget there, they want to see that money being spent very quickly. They certainly don't want to see the money coming back to them again. So they will only focus on projects that are ready to go. That's why they look for things like planning permission. They look for things like, say, your license agreements, your deeds, your lease agreements, your insurance, your capacity to fund it yourself, the matching funds, your bank statements, all these things they will look for. If you don't have them, then you're not going to be eligible for the grant to get the grant. So you need to be very, very well prepared when it comes to getting grants. You have to have the consultation needs analysis done. You will not get a grant from anyone if you don't prove to them that you need it and that there's a requirement for what you're doing. And you have to back that up with, you can't say, oh, we think there's a need for this. You have to back it up with proof that you've done the consultation, you've done the surveys, you've identified how this need came about. So if you say that, look, we need additional funding because we've identified there's an increase in unemployment in our local area, that's fine, but you got to back it up with stats. You got to show where these are. If we're doing, say, a piece of work around developing sports facilities for a sports club, we'll show the funder. Currently, we're at capacity. We've a waiting list. We're turning kids away because we've no space. If you provide us with the funding to build additional pitch or whatever it might be, we'll be able to increase our membership by 30%. That means there's 30% more kids getting access to sport, getting access to outdoor recreation, access to physical activity, which is important for them, but it's also important for you as a government in terms of your own strategic policy. So we'll show them that we've identified a need and what we will do will actually meet this need, and we've proven it will meet the need. Just saying it on a piece of paper without backing it up with any data won't get you anywhere. You need to have the necessary documentation on file. Standard things there would be your annual accounts, your annual reports, your 6 months bank statements, your deeds, your lease agreements, your insurance, your governance documents, your members of the association if you're a company, your matching funds, that there's money in your account to pay for the balance of the grant. So if you're getting, say, 80% grant, 20% has to be coming from yourselves. That has to be shown in either a bank statement or shown as a loan agreement. So a loan agreement has to be in place with the bank. And they'll ask for other things as well, maybe tax clearance details, all that would be looked for. Which sounds, that's easy. Providing documentation is not a problem. It isn't a problem if you have the documentation ready on file, but most organizations don't. They have no idea where half the stuff is. So you got like a 4 o'clock deadline to get a grant in, and at 10 o'clock that morning, you're looking for a members articles association. You ring your accountant, the accountant says, I don't have it. You ring the solicitor, the solicitor says, I gave it to Mary 6 months ago. You ring Mary, Mary says, I have no copy of it. And now you can't apply for the grant because no one can find that one document. So that's just bad planning. It's not being prepared properly. We always recommend to have a generic application completed. So if you apply for a grant before, keep it. Keep the application that you completed, because most of the details in every application are the same. So you're just going to cut and paste from previous applications. We try to get groups to do kind of a fairly detailed application form. So if you do one detailed application form, you cover yourself for all the other ones going down the line. So like, for example, if you do a public application for any public funding, they're so detailed that once you've done one of those, you have probably all the information you need to any other application that you could think of. And it's really important that you have one complete, because no point starting from scratch where you're spending time trying to gather details. To have all that information in place, you're delivering, cutting and pasting. Again, the last thing obviously is complete the application form, provide all technical and support documentation if it's required. Again, a lot of groups, they can ignore the criteria and they don't comply with what they're supposed to comply with when they're applying for the grant, and then they get turned down. Not that they get turned down because the project's not needed. The application is not even assessed. The funder will not assess the application if the technical details that are asked for are not provided. So if you miss one document at all, whether it be one piece of paper that's needed that you don't have submitted. In some cases, like with sports capital funding, if you submitted a document, it might be like a letter from a solicitor, or it might be a letter in relation to planning from the county council, and they forget to date it, it won't be accepted because it wasn't dated. If you get an invoice or a quotation from a contractor that's been submitted with the application, but the quotation wasn't dated or wasn't signed, it might prove that it mightn't be accepted because it wasn't dated and signed. You might submit a bank statement, for example, but the name on the bank account might be a trading name where you submitted the application under maybe a company name. It won't get accepted because it's a different bank statement as far as they're concerned. So technical things like that, will stop you from getting assessed. And that means you basically wait another 12 months then to get the grant approved or get the grant assessed, which is very, very frustrating. You spent all the time and effort in putting anything together, and one line or one word or one letter or one number stops from being assessed. That's really frustrating. And with the online applications, most of the applications are online now. You can't go back afterwards and change it. So the days of driving to the department in Dublin saying, can I have a copy of my application or get a Typics out and change something? You can't do that anymore. Obviously, you can do before either, but you definitely can't do it now, because once it's submitted online, it can't be altered and changed. So you've no comeback. The grants planning, as I said, very important. Again, simple table that we use here, and not fancy, nothing complex about this, not using any very complicated software or anything. You literally write down the name of the grant that you feel would be eligible, you're eligible for, where that grant is coming from. So whether it's, say, Kerry County Council, Pobble, a government department, wherever, put down a contact person's name that's going to be dealing with the grant, their contact number, and their email, because you want to become their friend, because they're the ones you're going to be contacting for information, let them know the application's gone in, and you want to make sure that they're going to be giving you as much advice you possibly can prior to the application going in. Any queries you have, you work through your contact. Okay, after the application's gone in, you thank them for accepting the application, and that you can't wait to see what the results are going to be. If you get accepted for the grant and you get approved, you thank them for the approval. If you get turned down, you don't go nasty on them. You say, thanks for the opportunity. Can you please let us know where we fell down on the grant, because we want to approve it for next time around. In order, you've built a relationship with the people that are funding you. Okay, really important. Build your database when it comes to grants. Really, really important. Those people will change. They'll rotate within their organizations, or they'll move on. So you got to find out who the person in contact, who the person in charge is of that grant. What project is the grant going to go towards? Okay, is it for a specific thing, or is it for a number of different things? The deadline. So you write in the deadline. Really important. You put the deadline in here, because that's what you need to know what the deadline is. So you got to start working towards that. What is required? So how much information is required to put the application together? What information do you have to gather and get ready? Now, because you got, maybe a lot of work involved in putting the application together, you start looking at, say, let's start putting actions here. Let's look what we need to do, and then look at who's going to be responsible for it. So typically, if I'm working with a sports organization on a sports capital grant, I'll send them on this template. No, not all this template, but part of it. And what I do is I'll start with this and say, okay, well, we need the following. So I'll list what we need, or I need from them. And then, what they need to do to get it. So, for example, if they need, let's say, quotations, right? They need to go off and get 3 quotations for equipment, for example. Then they will assign someone that's responsible for that. So they'll assign a person on their committee that's responsible for getting those quotations. Okay, so now you've got someone to chase and to harass if I need to get that information to me before the deadline. Okay, if you don't have this sort of planning in place for grants, it's going to be last minute rush, panic, stress, a pretty bad application probably at the end of it, because rushed, that goes in, and then people wonder why they're not getting approved for grants. The level and quality of grants application have, in some cases, increased considerably in terms of they're really good, but in the last 12 months, they've got really bad, because there's been so many grants out there in the last 12 months, people just firing in grant applications. And I literally mean firing in, like, no thought into them, spelling mistakes, inaccuracies in terms of content and information. And you're just thinking, like, this was something that was literally done last minute and was rushed. And you're talking about, in some cases, big money. And so, you could spend 6 months trying to fundraise for €5,000, and one error on an application form for a €5,000 grant can stop you from getting the grant. So spend a couple of days, spend a bit of time preparing for it. Really important. And make sure there's people responsible and accountable as well. Don't say, well, yeah, we do this and no one's responsible for it. Put a name to the person who's going, put a name to alongside who's responsible for doing different things. So if one person is responsible for getting the bank statement off the bank, that's their job. That's all they have to do. Go and do it. And give them deadlines to get it in as well. So we normally give a deadline of a week before the application deadline to have all this information in. And we normally say to them that they don't have it within the deadline, within reason, that we won't be in a position to put a grant application in. So we put a lot of pressure on them to get the application in. We can't lie about the deadline, because they know what the deadlines are, but if I could, I would, just to get them under pressure to get them in early, because otherwise you're going to be rushing, and rushing isn't good when it comes to grants. So where do we get the information on grants? there's no secret to the trade here. This information is available to you everywhere. So people say, I didn't know the grant was available. I didn't hear about it. The 3 sources that we use would be Kerry PPN. So they, on their website, they have information, kind of news alerts on their site. They've also got a newsletter they could send out as well, and they update when grants are available to groups within the county. So, for example, all the county council grants that are out there every year, they will be advertised on that on the PPN site and on the newsletter. Funding Point is again is a part of the wheel.ie. Funding Point is a subscription site. It's about $120 for the year to be a member of it. And once you're a member of Funding Point, that's basically a database of the grants that are available to every organization. Some are not relevant to you because there might be geographic based grants like, say, Dublin or Cork or Limerick or Galway or whatever. But the other grants then will be available nationally to people. Active Link is similar to Funding Point. It's basically a one-stop shop resource for community volunteer organizations, got information about grants and everything else come up as well. So the 2 websites, the Active Link is this one here. So you just go into funding and click on funding, and it brings you into what funds are coming up around that time. Okay. The Funding Point one, you go into funding opportunities, click on that. It's a database, and normally there's a link then to the various different websites that or like say if you're looking to apply to a department for funding, it will have a link to the department site, which has the criteria and guidelines and terms and conditions and all that kind of stuff. So it's a very, very simple to use database. You don't have to go in there every day and look at it because grants don't appear every day, but I would normally recommend that someone from your committee would spend maybe half an hour maximum, not even that, just going on to either Active Link or Funding Point just to see what's coming up in that week or what's happened that week that might be relevance to you. Another way is getting on the mailing lists of the various different government departments. So you contact them and say, look, can I get on your mailing list? So when the grant is being advertised or being announced, you will get an automatic email saying that the following is being announced by a government minister today or whatever. Again, the newspapers will have it. If you just Google it as well, you'll find details about grants are available. But these are 3 sources that we would use: Funding Point, Active Link, Kerry PPN. If you're keeping an eye on those on a regular basis, you're not going to miss out on a grant opportunity. And it's very frustrating when you find out that you could have got grants, but you weren't aware of them, and you missed a deadline because you didn't hear about them. Back to planning again. Just keep an eye on these things. It doesn't take that much time. You spend hours on social media, most people every week. Spend 10 minutes on this once a week, and you'll get access to the funds you need. And again, this is a fee-based one. You pay for this. This is free. Okay. Just give you some of the sample grants to show you what the types of grants that are out there, on an ongoing basis or annually. So I suppose Leader is the main source of grants for a lot of community volunteer organizations. So we've got South Kerry Development Partnership covering South Kerry, and you've got NEWKD covering Northeast West Kerry. At the moment, they're in kind of a limbo. Their program, their last program finished last December. They had transition funding this year, and they'll probably have something similar next year. We don't know what the budget's going to be and how much will be available to be allocated to groups, or would that money just cover existing applications that have already gone in? We don't know, and they won't know themselves until probably January, I say. The new Leader program will probably come in 2023, so a year's time, hopefully. So based on, say, previous programs, they had 2 types of grants. They had 90% funding for feasibility studies up to €25,000, and they had 75% capital grants up to €250,000. In certain situations or kind of very unique situations, they would have up to €500,000 available under capital grants. Now, when the next program comes in, they'll have a brand new budget, so they'll have millions of euros in their pot at that stage. So that's really kind of, if I were an organization now looking at long-term projects, I'd be aiming for 2023 to be ready with a shovel-ready project, to be ready for Leader funding when it's there, because we first come, first serve, as it always is. And because the pot is big at the start, the first in, get decent funding off them. We don't know yet what the criteria will be or what their funding is going to be aimed towards, but they will exist. There's no guarantee either that that leader will be managed by South Kerry Partnership or any WKD. It has to go to tender every year. We'd hope that they will get it because they've got track record in managing this, and we know the people involved, which is also helpful, and they're local. The next one is Town and Village Renewal Scheme. So that's administered through Kerry County Council. They would have funding from 20,000 to 100,000 euros available. It's an annual program, funding program. The Outdoor Recreation and Infrastructure Scheme, again administered through Kerry County Council. They have small scale projects up to 20,000 euros, medium scale projects up to 200,000 euros, large scale projects between 200 and 500,000. In the last few weeks, the Outdoor Recreation and Infrastructure Scheme funding was announced, and Kerry got fairly substantial funding. The ones I'm aware of are the Tralee to Venus Greenway, the Cockshell Bay route of that has got 500,000 for that element of it. The Kenmare Peninsula Lands down in Kenmare got 200,000 to start their project there, where they're looking at developing a series of walks and a amenity park. And other projects got small funding as well. Again, it's administered Kerry County Council. They pick a number of projects every year to fund, or not to fund, but to support. But again, it's towards things like trails, walkways, outdoor projects. So if you're in a rural area trying to develop maybe an infrastructure project, recreational project, certainly something to look at. Same with Town and Village Renewal. They cover things like, say, community facilities, amenities, upgrades to buildings, that kind of stuff. For large scale projects, we're talking multi-million euro projects. You've got the Rural Regeneration Development Fund for rural areas, so for areas with populations less than 10,000 people. And you've got the Urban Regeneration Development Fund, which is for areas where they're large urban areas like Tralee, for example. They have two categories of funds. The funding agency, Department of Rural and Community Development. The lead applicant has to be local authority or development company, or Udros the Great Stuff, for example, in Kerry. So if you're in Kerry, you'll be going to need a Kerry County Council will back the project. Either one of the local development companies will back the project, or Udros will back the project. They have two categories of funds. Category 2 funding would be what we call a pre-development stage for projects where you're looking at doing a master plan, getting planning drawings done, construction drawings done, getting your surveys done, getting planning permission ready, getting the project at tender readiness where it can go out to tender. Category 1 funding is where you're ready to develop the project, you've got planning in place, you've got your tenders ready to go, and you're ready to start the project, and you apply for capital funding. They're for projects in excess of 500,000 euros. So, there's been projects there funded. We were involved in one in Nina. It got last year 9 million in funding for a large Centre of Excellence, and it was part of the regeneration project. Two projects back in Dingle were involved with Ballyferrett. We got about 300,000 under Category 2, and Dingle Hospital got about 370, 380 under Category 2 as well. Not sure the exact figures, but in around that, but substantial money. But they're for large scale projects. Again, local authority or lead applicant, or local development companies, they can only pick a number of those every year to support and back. But for large scale projects, you're looking to develop them. It is probably the only show in town for large scale funding. Then your lower scale projects, Community Enhancement Programme, again, administered through Kerry County Council, Community Support Fund through KCC as well, Clore, if you're in a Clore area, which pretty much most of us are, again, they would have funding for community projects and facilities. Pubble have a range of programs. So if you go into Pubble's website, they have like the Ability Programme, the Community Services Project Programme, they have childcare, they've got a whole range of programs that they fund and administer. The Community Foundation, again, have a range of grants. If you go into communityfoundation.ie, go into their grants, they tell you what grants are open, what grants are closed. And again, they can be very specific, but again, they're wide ranging enough that they'll cover a lot of organizations. Rethink Ireland, the same. They've got a number of different grants they would have annually. Again, just, I would keep an eye on these things. Again, email the administrators, email the people in charge of Community Foundation, in charge of Rethink Ireland. Say, look, get me on your mailing list. When they're opening grants, they'll email you and say, look, the following grants are now open for applications. The deadline is whatever it might be. Like, it's in their best interest to make sure that the quality of grants are good. So they will support you and they will advise you in terms of the grants. So if you're not too sure about the criteria, are you eligible, not eligible, contact them. Build up again a relationship with them. Get to know who they are, the people involved. And they will support you, because that's what they're paid to, is to support you. You got then, like, say, in areas where you're maybe trying to develop biodiversity projects, river projects, waterways projects. You've got the Community Water Development Fund. And I'm just showing you samples of grants that we would have been involved with over the years. So Kerry County Council, again, would administer this through the local authorities water program. Again, would fund feasibility studies, kind of analysis of rivers and waters. Again, mostly environmental type projects, but you can tie in things like recreational projects there alongside them as well. We might be doing, like, say, a river walk or a recreational park alongside a river or something like that. FLAG, the Fisheries Local Action Group in the Southwest, they will fund programs that are marine related, and that's fairly broad in terms of what they will fund in coastal villages. So again, if your village is based along the coast, and doesn't have to be literally on the coast, doesn't have to be like literally next to the water. I know I'm living in Causeway, and Causeway is considered a coastal village because it's near the coast. I think Ballyduff is actually a coastal village as well. So again, once it's on the kind of coastline, you can look at what sort of projects we could develop. So it might be that obvious because you might think, but it's something to do with fisheries, and it's to do with like piers and slipways and fish production and fishing or looking at food production or whatever it might be. They'll also cover like feasibility studies for, say, marine tourism projects, marine festivals, marine activity around, let's say, kind of looking at alternative enterprise for fishermen, for example, right, and fishing families. They look at marine heritage. So if you're developing, let's say, a heritage project and you're near the coastline, again, you can look at FLAG as being a potential to fund that. We would have done, say, 2 tourism strategies around blue way developments that would have been funded under FLAG because we're marine related. If obviously things like, say, if you're doing slipways or piers or pontoons or fishing platforms like that, obviously you'll be definitely looking at FLAG as a possible funder. And then if you're a sports organization, or if you provide sports within your facility, so you don't have to be an actual club, you might have just a community center, but you make the hall available for Pilates or yoga or active retired, get active projects or whatever it might be. You can apply for sports capital funding for either capital costs, which would be building works or pitches or drainage works or things like that, or you can apply for equipment grants. So a lot of smaller groups that they're not clubs, would apply for, let's say, small scale equipment for, like, say, maybe gym equipment or yoga equipment or something like that, just to provide a space within their community facility. They can provide recreational space. So again, a lot of organizations will go after sports capital funding. Their maximum grant is 150. It's rare that the groups get the maximum. They normally we get maybe 40-50% of what they look for. Those grants haven't been announced yet for 2022. They haven't been announced. The application went in 2021 haven't been announced yet, so we don't know if they've been funded or when they're going to be funded. But the new program hasn't been announced yet. But again, that's something to look at for your community if you've got an interest in developing recreational facilities within your community. And that can be something as simple as a walking trail or walking track as well. Anything that's about recreation and sport doesn't have to be all sport related. It can be just purely recreation. Okay, so I'm just going to stop the share for a second and ask, is there any questions on what we've covered so far in relation to the planning side of it, or in relation to the grants and what grants might be out there? No? All very clear, or you're all thinking, forget about it? Yeah, you okay? So I suppose the important thing, just to recap, is again, we've a lot of groups looking for grants constantly. They've no planning done. They've no preparation. Waste time. And we'll tell them, there's no point in me getting involved with them unless they have the stuff done. And like, there's a lot of groups out there that are maximizing grants. They're maximizing their fundraising. They're maximizing the sponsorship. They're generating, huge, in a lot of cases, huge revenue every year through a mix of funds, because they have a good strategy in place. They've got good financial policy and procedures in place. They're very well organized when it comes to getting money, and they chase and they go after, and they're not afraid to cold call. Not afraid to go out there and ask for something. and they just maximize it. Very often that's a committee that's doing that, or it's been led by a very strong kind of administrator or coordinator manager. But the key thing and the key common, factor with all of them is that they're very well organized and they have a plan in place. Okay, they're not accountants or financial gurus. They're just well organized, and they're ready. They're always ready when money's available. It's like someone walking into the room with a tenner in their hand. Who wants it? The first gets it. The fellow on the back that's falling over the desks and tripping over themselves because he's not organized. They won't get it. The fellow up front who's ready, has the route planned out, will be first to pick up the €10. And that's what it is. It's down to planning and being organized. Nothing more, nothing less. Groups get all mad about, I didn't get this, I didn't get that, I didn't get funded. We got turned down again. Always ask why. And you go back and look at why you got turned down, and you go through the application form thing, and there's no way in the world you would ever got funded with this application form. You're being compared to 5,000 other applications. I would say yours comes up maybe, the last 10. So you got to be, I would be as blunt as that with groups, because they need, you need to look at, there's a small pot of funding out there when it comes to grants, right? It's very, very, very competitive. There's an awful lot of people looking for that money. An awful lot of those groups have serious political power behind them and political weight behind them. Okay. So unless you give them, if you give them any sort of reason to turn down the application and say, no, we're not going to give it to you, you're going to get turned down. You give them no reason. You give them zero reason to say no to you. Right? You have to make it very difficult for them to say no. And if you've done that much, then if it's not awarded after that, at least you can say, well, we've done everything we possibly could to get this over the line, and it doesn't happen for us this time around. We'll try again next year. But when groups go out there with kind of a half-baked application, and then they give out about not getting a grant, just push down the line in terms of the grant application. It's, look, they don't know you. They're not there in front of you. The only way they're going to find out about your project and is worthwhile funding is through your application. If it doesn't stand up, they're not going to fund it. Simple as that. The same if you're looking for funding, there's fundraising or sponsors. If the person you're asking for money from is like, oh, I have no idea what you want to do with this money. I have no idea what your project is about. I have no idea what you're about. I'm not going to give you money. How many people come to your door, not anymore because of COVID, but in the past, selling, tickets to race nights. You're like going, who the hell are you? For a national school, maybe like 40 miles away. You got people calling the door, raising money for a school that's not in your parish. Like, my kids don't go to your school. They go to school up the road. I'm going to fund that school. I'm not going to fund your school. Nothing wrong with your school, but I'm not going to fund it. Why would I? So give yourself the best possible chance of getting funds. Think about what you're doing, where you're going, look for money, and plan it. That's basically what it's all about. And you will bring in plenty of it if it's planned properly. So no other questions on grants or planning, no?
Tom, if I could just give an example, I was actually adjudicating some applications yesterday. Now it's in a different county, and I'd say 20% of them I can't even grade because they didn't fill out the boxes, and it's kind of frustrating as well because one of them, from the photographs of the project, it looks amazing, but they left out most of the essential information. And I was just kind of laughing when you were talking about, filling out the form at the last minute. One of them actually looks like it was filled out as they were running out the door. And it wasn't the fact that it was handwritten. It was the fact that it was actually all over the place, not even in a straight line. It was like it was the greatest rush job, just get this thing in.
Probably roasting the car as you're driving.
And I would think that's exactly what it was. And it actually makes no sense. It probably makes sense to them because they know what they're doing, but it makes no sense. And it's disappointing when you're reading them because you think it's a lost opportunity for the group.
Absolutely. I'll give you just a quick story. I remember years ago, before the sports capital applications went online, and you had to drop them in or post them into the department. And the department's in Killarney, for the sports capital department's in Killarney, which is great for us because we're over the road. And I was there and dropping in the application. I had about 5 applications I was doing for clubs, and I was dropping them in, maybe around, I think the deadline was 5 o'clock, and I was over there at 4 o'clock dropping them in. And I was walking out, and I was having a chat with someone outside the door, and this car came in at speed with a Northern Ireland registration on the car, right? And they just abandoned the car and ran out with this, a bunch of applications to his arm. And I said, where you come from? They were after driving from Tyrone. They said they literally so late that they couldn't post it because if they posted the day before, they weren't sure we'd get there in time. So someone nominated, they would drive down from Tyrone to Killarney with an application form. I hope to God they got it, because fair play to them, but they left it to like an hour beforehand, So if they had traffic, it'd been disaster. And that's bad planning. That's like, if they posted 2 days before, didn't have to drive anywhere. But you'd see these kind of mad things going on. But yeah, like it's really frustrating to say, Caroline, when people think, they say, Ash, it's only a box ticking exercise. It is, but tick the bloody box. Just because I won't bother ticking that, they know, sure, that's in place. They're sure, of course, they know that. You have to still, because it's going to be open to scrutiny, because if you get turned down for an application and you find another group has been funded, you can actually, under freedom of information, look at their application form. And if they didn't fill in 3 sections and they got funded, you can now cause mayhem within government circles and say, how come they got the money? What political influence do they have? So no political person, councillor, elected representative, TD, the Taoiseach himself or the Taoiseach himself, couldn't kind of fix this if it's done wrong. Like I remember talking to a minister in West Limerick, and you probably know he is now in West Limerick, and he said, Tom, I can only fire what they say. I can only fire the gun if I have the right ammunition. If I don't have ammunition, I can't fire the gun. He said to me. What he meant was, if you don't give me the proper application, give me the proper information, I can't do anything with it. I can't go to civil servant with something that's not done properly, because they won't accept it. Like, that day is long gone, like, because of accountability and transparency and everything else. Mm-hmm. So just be careful when you're doing it that it's done right. Get someone to proofread it as well. Because if you're looking at the same thing over and over again, you think, I've done that, that's fine. But get someone independent to look at it to make sure it is done right, because you might miss something. Okay, so I'll go back to the PowerPoint again here. So fundraising, now you've all been victims of this, whether it be giving money to someone or actually collecting it. We've all been there, done it, and we'll be doing it for a lot longer, I think. So there's numerous methods of fundraising. The more creative you are, the better, and it's getting more and more difficult to be more creative, because there's constantly new kind of fundraising schemes being developed every year. Some groups are going after professional fundraising companies to do their fundraising for them. I have no problem whatsoever with that at all, on the basis that it's very, very clear and transparent to the people who are giving you money that there is a professional fundraising company behind it, and it's very clear in terms of where the money is going to. Okay, so the last thing you want is a local person thinking that, hang on a second, there's a professional consultancy company here, taking a large percentage just off the top. That can create major problems. Where most people get in professional fundraising companies is where they're running events, right? So like race nights, like your Strictly Come Dancing type events, the Cube, all these kind of like events that are run as fundraisers. Some groups will bring in professional fundraisers to run things like to kind of win a house campaigns that are happening at the moment within Kerry with GA and with is there another, or is it a school in Cork? I think actually they're trying to raffle a house in Killarney, which is kind of ironic that they're in Cork to raffle a house in Kerry. But anyway, so they would organise that, because what they'll do is they'll do all the social media, all the marketing, all the advertising, and I said if there's an event, they'll run the event as well. Now there is a cost associated with that, so you got to factor that cost into your overall target. So if your target is €30,000 to raise with your fundraising, and that company's taking 10 off the top, now your target's 40. Because you need to look at your profit you're making out of it, and your profit's your target. And they will take the fee regardless of what you actually bring in. Okay, so they won't sell tickets for you. You got to sell those tickets yourselves. What they'll do is they'll make it more kind of professional looking. I always say to groups, if you're doing fundraisers, look at the return that's involved for the effort. Sorry, look at the return for the effort that's involved. So, for example, if you're doing, like, say, 10 fundraisers a year, that's an awful lot of work. You're probably bringing less money if you did one large fundraiser, which is, okay, there's a lot of work involved in that, but not as much as doing work over the course of a year. The other reason why I kind of look at large fundraisers rather than smaller events, if you can do a large fundraiser once a year, you can actually make a bit of a kind of a big deal of it. You can make a kind of a sociable thing out of it. So, for example, if you run an annual golf classic that people know it's on every year, the same time every year, they'll factor it into their diary, right? They'll organize themselves. If it's a race night or a social event like an annual ball or dinner dance, something like that, once a year, people will say, okay, we know it's on every year, we'll gear ourselves towards it. If you're going back to many fundraisers, you're asking the same people for money over and over and over again. They're going to get sick of you. You were here 4 months ago fundraising for something else. Whereas if they know if they're going to ask once a year to give money towards something, that to me makes way more sense, because now I don't have to put my hand in my pocket every time they come looking for money. I just have to give them money once a year. and it can be part of a social event. So you're actually going somewhere, like buying a ticket for something that actually, there's a bit of crack involved with it. So a lot of groups now are starting to do kind of like maybe weekend events, where they might do like an annual festival over the course of the weekend. Normally might be a team associated with that, where they'll do maybe, various different kind of maybe wellness events, or they might have talks, seminars, workshops where people pay for that. They might get sponsors into sponsor parts of it. They'll have family-friendly events like maybe barbecue, or activities for kids, face painting. They might have music and stuff on like that. I'm not talking about like your music festivals where they're sponsored by like drinks companies. I'm talking about your local community type events and festivals. We were involved there in a project above in Cullehill in County Laois. You might be familiar with this all the way from Cork to Dublin, the old Cork to Dublin road. And they ran, was it 2 years ago, I think it was? Or maybe 3 years ago now, because it was 2 or 3 years ago, I can't remember. They ran, they wanted to raise money for their community centre, so they decided to run a festival. And there is a company up there called, is it Paddy Granola? They do granola pots, porridge pots. And there's there is an annual World Championship porridge making competition in Scotland every year. And there was no representative ever from Ireland, because there was never any kind of like national porridge making competition in Ireland to send over a representative. So they said they'd run a national porridge making festival in Cullehill over the course of the weekend. And they brought in music, and they had food demonstrations, and they had face painting and blah, 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 and all the rest of the stuff. And they made about, I think, between 30 and 40 grand they made out of the weekend. And it was great crack, and they got great enjoyment out of it. And people from all over the area came on board because it was kind of unique. And they want to run it annually, but then of course COVID came in, so they couldn't run it. But it'll be an annual event now that they'll run every year. So these things, like they can be very social things, and you can bring in money through sale of tickets, but you can also attract sponsors in as well. So you're doing large one-off events. Smaller events then would be things like your cake sales, your flag days, your backpacking, all that kind of stuff. A lot of work involved for very little return. A couple €100 here, a couple of €100 there. To me, if you're bringing in €20,000 from one large fundraiser, and you're bringing in 10 from maybe 5 small fundraisers, it makes sense to go for the large one. Look at your fundraising online. Again, something that a lot of groups didn't do at all, ever. And then COVID came in and they realized, hang on a second, we can't do backpacking anymore. We can't go to the door anymore. We can't do race nights anymore. We can't do a fashion show. We can't do a golf classic. We can't do anything anymore. What are we going to do? Where are we going to get money from? And panic stations kicked in, and they realized we can go online and we can start raising money online. However, a lot of the groups didn't have any websites, had no social media presence. They had no way of raising the money online. So they went up and they went and looked at third-party websites like mycharity.ie to raise money through third-party charity sites. But you're fine, and they have a place, and they work really, really well. And it's a very fast way of setting up an online fundraiser. However, long term, you need to be looking at your own online fundraising platforms. So that's mycharity.ie there. This is an example of a company or an organisation, Focus Ireland, that do their own online fundraising. So on their website, they have a fundraising page. And what I like about this, and this is only one example of many, but what I like about this is they give you different options. So you can donate. If you click on donate now, you go into either PayPal or Stripe, whatever it is, and you put in your details and you pay whatever you want to pay. You can buy Christmas cards off them. You can organize events and challenges. So, for example, if you want to organize an event for them, you could, where you can raise money on their behalf. If you're a company, you can do a corporate fundraiser. So you can do maybe a corporate team building day where you're raising money. So Lidl, for example, do this. They raise money for their chosen charities. They pick a charity each year that they'll support, and they get their staff to raise the money. So the staff will do a team building thing. So it might be like, a kind of a challenge or some sort, or a marathon or whatever it might be. And then they will raise the money. In some cases, companies will match what the staff raise, maybe euro to euro. So if the staff raise €1, the company will match with €1. So they have a corporate fundraising program that they'll help with companies to run. Tax efficient giving is where and I'll talk about this later on, if you give a donation as a PAYE worker, if you give a donation of a minimum of €250 to a charity, that's approved by revenue to get tax relief on donations, that charity can claim back the tax you paid on €250 each year. So if I give €250 as a PAYE worker to charity, they give me a revenue form. I fill in with my PPS details. they send that form off to revenue. Revenue then will reimburse them the tax I paid, that €250. So if I'm paying 40% tax, they get 40% on top of the €250 that I've given them. They have an option to leave a legacy, so someone can leave money in their will or their estate to the charity. So I like what they've done. They've given people options. Okay. The other thing with online fundraising is that you can do an online fundraiser through social media, like Facebook, for example. Their online fundraising, they don't take any commissions, any fees on it. But the beauty about an online fundraiser is you can target a massive, massive market. Okay. So for example, if you're doing a backpacking in Tesco on Friday, okay, the only people that can give you money are the people that are shopping in Tesco, because there is no one else to give you money, because there you are collecting money off them. However, if you're online, you've got a good social media campaign going, and you're targeting people who know you, know your committee members, know your community, know your town, are from your town or village, and are living abroad. Doesn't matter where they are. Once they've access to the laptop, broadband, and the credit card, they can give you money. Okay, so think about that. Think about all the people that have left Tralee or Kerry or wherever you're from, and that are abroad now, and they want to get involved in their community, but they can't because they're thousands of miles away. But no, they can. Now they can donate money to your cause. Some schools do it. They develop an alumni program where they target and they track down past pupils living all over the world. They create an alumni program, and they ask basically those past pupils to support the project that the school is developing and delivering. It's a really good way of getting money. The county board were very effective at doing this. They went to London there a couple of years ago, and they went to New York. Well, New York more so than London was better. And they raised lots of money abroad for their project in Corns, their Centre of Excellence. They went after the diaspora. That's what they're going after. People who left Ireland many years ago who wanted to stay involved in the GA, want to be part of the GA legacy in County Kerry, and they're willing to put a hand in their pocket and pay for it. But they didn't go after everyone. They went after people who could afford it. You know, people who had the money. They went after companies, corporations that could donate large amounts of money, and that was the best way to do it. So not only were tapping into the local community to help support their projects, they went after people who left the community either a short time ago or a long time ago. And something you need to look at doing as well. What I would always recommend is maybe if you're doing an online campaign, do a video, because again, 30-second commercial or even more, which kind of outlines what you're going to do. So for example, if you're doing a building project, get your architect to do kind of 3D images of what the building will look like, maybe a flyover, walkover. We're doing one for Park FC at the moment, Simperns Park FC in Tralee, and we got a video up on social media, which is a 3D kind of overview of what the pitch is going to look like when it's completed. So if you're a parent thinking, geez, that's going to be amazing for my kids down the line, I'll help support that. I'll pay €25 for the ticket to win a trip to Florida. It's €25, but what they're going to get in return for €25. So you're showing them. Whereas you say we're going to build in the pitch, that doesn't really kind of excite me in terms of giving money to someone. If I can see what it's going to look like, that would give me more of an impetus to actually do the work. Give the money over to them. Same with as often see with projects like that, or building projects, to put a big billboard outside the site showing what the building is going to look like when it's finished. They might have a big sign over saying, "Help us achieve this, help us build this." People can see what it's going to be. They're more than willing to give money then. Whereas if they don't know what it is, they're probably not going to. Okay, so fundraising, keep it. Again, plan it. Back to plan again. Look at your long-term, your target, what you want to fundraise. It'll take you months to plan it and to work towards it. You need to get as many people involved as possible on your fundraising committee, get as many bodies around the table that would sell as many things as possibly can. 2 or 3 people who won't do. You might have 2 or 3 people organizing and planning it, but you need 40 people go out there selling tickets. Okay. You can't rely on the same number of people to fundraise every time. It's not fair. It needs to be spread out amongst many people. If you're looking at fundraising in fundraising, if you are going on the social media route, or if you're developing your own website, this came up yesterday in the workshop yesterday morning. It was a good point that was made to me. A lot of people don't trust giving their credit card details to websites. They're not secure. So make sure your website is secure. So it's got the lock on your where you put in your website. I can't think of the URL. Basically, so the address bar, make sure there's on that there's a lock. On the secure website, there's a lock. If it's not secure, there's no lock. So just make sure that your website, whoever's developing your website for you, has those levels of security built into it. because otherwise people won't trust giving their details over your on the site. And again, if your site looks kind of rubbish and it's very kind of amateurish looking, again, people aren't going to be too confident about giving their details and giving their credit card details on that site. Use things like obviously Stripe or PayPal or whatever, just to look at the fees that are being charged too, so you can factor that in as well. You can also use texting, so text fundraisers as well. A number of companies out there doing that. Again, they would charge fees for that. You know, a lot of the fundraisers you see on TV, the late show ones that they're doing over the last year or so, they're all text campaigns. Again, very simple to do, very simple to operate. Third parties companies doing it for you. They'll charge a fee on it, they'll charge commission on it. But again, it's just another way of bringing in, maximizing the income you can bring in. Look at all the ways you can bring money in through fundraising. Don't just pick one. Look at multiple options. Sponsorship completely underutilized in Ireland, in a lot of countries, but definitely here. I don't know why. I do know why, because people are constantly going to companies and saying, no, we're not going to sponsor you, or no, we're not interested, or no, we don't have any money, or it's a bad time of the year, call again tomorrow when the boss is back. This kind of rubbish. Bad planning again. You know, people cold calling. There's no point in cold calling a company and saying, would you help us out here? They're not going to. You know, why would they? There's no reason. They can say no. It's the easiest way in the world to say no to someone. If someone is trying to sell you something and you have no interest whatsoever in it because you haven't been convinced of it, you say no, not interested. You know, the usual excuse you give is, I'm already giving money to another charity. It's a bad time of year. You know, we're down revenue. I funded you before, or I funded something similar, or whatever it might be. Right? There's always these excuses, right? Because it isn't bad planning. So the key thing, right, is to identify companies that are going to be relevant to you, right? The first companies go to the companies locally, because you know you'll be trying to use the goodwill angle there. Whereas you know, if you're a company locally, you're sponsoring a local charity that's supporting local people, that those local people are using your services or buying your products. You know, anyone with a kind of an ounce of kind of, you know, business acumen or any kind of cop on basically would think, well, if I give something to this group, they're going to tell their clients or service users who are my customers, that's good for me. Okay, so but some companies, some businesses don't get that, so you need to spell it out for them. You know, you need to say that, well, hang on a second, most of your customers are service users, therefore you should be supporting us. Look at what activities will get most coverage. So if you're running events, fundraising events, small fundraisers not going to get any coverage in the press, in local papers, local radio. You know, very little coverage on social media, very kind of few people talking about it. If you're a company, you're getting zero PR out of that. So why would you bother getting involved? You're going to involve something that's got you know, exposure. You know, a lot of people are getting involved in it. A lot of people are, you know, talking about it. It's on the papers, it's in the press, it's on the radio. You know, it's not controversial, but it's you know, it's getting good attention locally because this is a clever campaign or something. You want to be part of that. What are the benefits to the company? So again, the benefits to the company, key benefits to the company are they're going to get some sort of marketing return from it. They're going to get some sort of publicity out of it, some promotional benefits out of it. But also, and it's something again that they will be aware of or should be aware of. If they're not aware of it, be worrying. But again, spell it out to them that if they give you a donation or if they sponsor you, they can put that sponsorship money, the money they're giving you, down as an allowable marketing expense. So let's say they give you 5,000 euros, for example, right? They can, on their annual account, so when they're doing their tax return at the end of the year, under their marketing budget will be advertising in the Kerryman, advertising in the Kerry's Eye, advertising in Radio Kerry, sponsorship, 5,000 euros. They've now basically reduced their tax liability, their taxable income by 5,000 euros. So they're getting the benefit of that by sponsoring you. So the best time to go to companies, it's when they're looking at, you know, they're looking at year end, right? So if they're doing the financial year ends come up now, they might have a lot of money that they've, you know, they might have, you know, decent turnover, they might have decent profit made, and they want to see how they can reduce that profit down. If they give you X amount of that in sponsorship, not only getting the goodwill back from it, they're also getting tax relief on that sponsorship as well, because they're reducing their tax liability by that amount. Okay. So again, sponsorship is an allowable expense for marketing companies. All you need to give them is a receipt saying, thank you very much for the sponsorship of 5,000 euros. They give that to their accountant. The accountant says, fine, that does me. And they put that down as marketing expense. All good. So again, just use that. So that's no reason why they will get involved. If you're going after companies, again, don't cold call. Identify key people to champion your project. In other words, what you need to do is identify someone you know that knows the person within the company that makes decisions. So it might be, for example, if you've got a club. So one thing, the first things we did when we were involved in the fundraising for St. Bernard's Park LC is we said, okay, how many of the club members, parents, coaches, committee members run their own business, have their own company? And I think there was a lot anyway, right? So we said, okay, well, they're the first protocol. So when we ran our golf classic, they were the first companies we went to say, okay, can you sponsor a team, right? And most of them did. They were the first companies went to sponsor a tee box, for example, right? So we went and dealt with whoever was in our local network. Then we said, okay, outside that, who do you know has got a company in town or a business in town that might want to get involved? Okay, what parents do we know from the kids that are playing in the academy that are in senior positions within companies, in decision-making positions within companies, or run their own business? We go after them. Okay, so you're going after people that were involved already in the project. Not just randomly put some strange business owner and say, can you get involved in the project with no interest in whatsoever? And you exhaust all your direct contacts first, and then you move on to the next ones. And the next ones will be those contacts, their contacts. So Tom O'Leary, whose son plays with the under 11s, he's contacted. Tom gives money over. Then Tom's asked, can you actually talk to people you know who are not involved in the club that might want to get involved as well? Okay, so I get on to my 10 of my contacts, give them the pitch and say, look, this is what, literally, this is what we're trying to do. And then if half them give money for it, right, then you ask those 10, can you now maybe talk to your contacts and see where they give money? So that's how you spread it out. So you build your network around it, but you start off with key people first that will champion it for you, okay? No point just randomly going out ringing around businesses locally or companies locally saying, we sponsor this, we sponsor this, we sponsor this. They're bombarded with people who ask them every day for money for projects, okay? You need to get in around the back to talk to people who are going to actually make decisions and who know you or who know people who belong to you in the club or whatever, or the organization that you're in, okay? Really, really important. I would focus, when it comes to sponsorship, there's two types of sponsors. The first is your sponsor who sponsors events, kind of one-off type things, a couple €100 here, a couple €100 there. Or might sponsor, like say again, a club where they sponsor maybe jerseys or sponsor, gear or whatever it might be, right? But you also need to look at partners where you're bringing on partners on board. This is for the larger scale projects where you identify maybe 5 companies that will come on board as your corporate partner for the project. In other words, they're giving you money, but it's on a partnership basis. And it's just a different word. It's just another level up from sponsor. And the partners, you wouldn't have like a load of partners because they won't be there, but they don't want to get involved where there's lots of partners because they won't get as much exposure out of it. Okay, so we're involved in the Ring and Carry cycle, and on the commercial side and the sponsorship side of it, and we identified maybe 5 key partners every year that would sponsor and give large scale either funds and product towards the Ring and Carry cycle. And then for, let's say, the expo days beyond the weekend of the cycle, we go after smaller sponsors then, like, so they have a stand in the car park, they'd be, they'll have advertising up around the area, whatever it might be. But our key partners were brought in on the larger scale. And we focused them on specific things. So we had a vehicle partner, which was Skoda. We had a food partner, which was Lidl for 3 years, then it was Super Value. We had a media partner, which was the Examiner, the Kerryman, Radio Kerry. We had another food partner, Nature Valley. And we had them Bond Securities came aboard as a partner as well one of the years. And what they get in return was they got branding all over the Ring and Carry if they wanted it. They got the logos on the jerseys. They got all this but they came in with a higher level of funding and support than the smaller sponsors did. So for your projects, what we would normally say is if you're developing a large scale project and you need to raise serious money first, you might be able to raise that money fast. So you might need to borrow the money, right? So you need to borrow maybe percentage of the money, to get the project off the ground. So you're now looking at a loan repayment every year. And let's say the loan repayment is say 30 grand a year. Okay. What we would normally then look at is say, okay, we're going to try to find, 10 partners that will give us €3,000 per year for 3 years. Or we'll find 3 partners who will give us €10,000 per year for 3 years. And we sign up to a 3-year deal. Okay. So they come in, now that money is guaranteed for the next 3 years to cover our loan repayments. We don't have to worry about paying a lot of our operational costs and, cannibalizing our money in our account that's going to cover utilities and all that. We're now funding that separate from a separate pot altogether. Okay. So that's why you look at, and those partners could get something in return, like they could get a naming rights, they could get their name on a board over the pitch or whatever it might be, or over the community centre or whatever. We one group before who got a kitchen in their community centre sponsored by a company. It was actually a company that does kitchen equipment, and on their website, our partners are, and the company's name was up there over their door in their community centre. This kitchen was kindly sponsored by the company, and it meant that cost, which was whatever 25, 30 grand, was now covered by them. Okay, so you need to look at kind of higher level partners, because otherwise it's a lot easier trying to find 5 people or companies will give you a lot of money as opposed to find 500 companies or 500 people will give you a small bit of money. There's less work involved in going after a bigger amount of money from less people, and they are out there. Like, there's some very good, very, very wealthy people out there, some very, very wealthy companies out there. You just need to give them a reason why you need to get involved in your project, and that's what goes back to your marketing. It goes back to what you're presenting to them, but also back to your planning as well. You don't just randomly pick up the phone book and start ringing numbers. There's no planning involved in that. Ask around, who's the key person here, who knows them, who doesn't know them, where's the in. Johnny's related to the first cousin of whatever. That's the kind of, you need to find out who the contacts are to see how can I get in the door here. Debt finance, try to avoid it if you possibly can, because it is something that you're going to have to fund on an ongoing basis. Loan repayments are there. They're not projected. They're real money going out of your account every month. You can go after commercial banks, your normal commercial banks or the credit union. They will give loans to not-for-profit organizations once you can show you got repayment capacity. If you can't show repayment capacity, they're not going to give you a loan. The same as if you walked in the door looking for a mortgage and you can't repay it, they're not going to give you a loan. So commercial banks, yes, you can approach them, but you have to repayment capacity. Credit unions, a bit more open to community because they're community-based banks anyway. They're a social enterprise themselves. They're owned by their members, so they are open to community projects, but you have to show repayment capacity. Then you got social banks. Social banks in Ireland, Cancredo and Community Finance Ireland. There are two social banks in Ireland. Social banks operate. They give out. They the same way as normal bank. They lend money out. You got to repay it. They will look at your repayment capacity as well. You have to show that you can repay the loans. The benefit of going after a social bank as opposed to commercial bank is a social bank only funds social projects or community-based projects. But the key advantage is that they don't look for guarantees from directors. They won't look for directors' guarantees on the loans, whereas commercial banks will. Okay, so if you're a volunteer director and your organization is taking out €200,000 loan with the Bank of Ireland, the directors will have to go guarantee on that. They'll sign guarantees to guarantee the loan. If you're going for Cancredo or Community Finance Ireland, you won't have to. Community Finance Ireland don't have a person based in Kerry. They have a person covering the Kerry region. Cancredo do have a person based in Kerry. She's actually based in Causeway over the road here. Sarah Leahy. She's ex-AIB. Very, very good to deal with. Understands the sector inside out, but knows Kerry, knows the community. So it's a good advantage to have someone locally based that are assessing the applications. Sorry, not assessing the applications, bringing the applications forward to the assessment committee. And she would advise on what you need to do, what you need to have as well. Turnaround time, probably a bit longer than the banks because you have to go through kind of the committee structure to get approvals on it. They do have specific loans for matching funding. So they have a loan specifically for Leader, where they provide a loan towards Leader grants. And they have a loan for sports capital as well. So with sports capital funding, or with any grant aid, you have to show there's bridging funds in place, because with a grant you spend the money first and you get reimbursed then afterwards. So let's say your project's €100,000, you pay out €100,000 to the contractor, you get an invoice from them, you get a receipt from them, you get a bank statement showing the money's being paid to them, you get a copy of their tax clearance certificate, you show a copy of your tax clearance certificate, you show a copy of your insurance, the file report, your accountant's report, all the reports submitted into the grant agency. They'll review it. If everything's okay and all the boxes are ticked, they'll reimburse you the grant that you've been approved for. But in the meantime, you've got that money spent, you got a loan to bridge it, right? So that loan will be sitting there for a number of months before the money is drawn down. So Tancredo, Community Finance Ireland, they have specific bridging loan finance in place for community volunteer organizations. Well worth talking to. if you have to, ideally you don't want to be talking to anyone about loans, but if you do have to, absolutely talk to your banks as well. So you talk to your credit union and see what they'll do also, but you're probably looking at these two as being your option. If you're looking for a loan from any of them, they will look for a business plan, including projections, and a projection will show your repayment capacity. So your income and expenditure projections for minimum 3 years, showing where the money's coming in, the money going out, and they'll look at what your repayment capacity is each month. So it's back to the very, very first slides we showed, that income and expenditure template. That's what they look for, 3 years of those, to see can you cover loan repayments. Like any bank will do with any loan, they'll stress test it to say, well, what happens if you're down 20% of your fundraising next year? What happens then? Okay, they will take that 20% off the bottom off your revenue, and they'll see how it impacts on your projections and how it impacts on your repayment capacity. The same as if you're looking for a loan from the bank, they'll stress test it. What if your income comes down? Can you repay the loan? No, you can't. We're not going to give it a loan. They look for details of the management structures that are in place, and the capability, capacity, and experience of the management team, or the board, or whatever it might be, or the manager or coordinator. In other words, they want to know, if they might have a great idea, might have a great project, but are they capable of actually running this project? Are they capable of spending the money? And are they capable of actually sustaining the project? And they look for that. If your structures aren't right, if you don't have proper governance in place, no proper controls, no annual reports, no annual accounts done properly, they're not going to touch you with a barge pole. They're not going to be 10 euros, let alone 100,000 euros. So you're not going to get the money off them if you can't prove that you're capable. Your repayment capacity is crucial. Difficult, very difficult to do with a lot of groups because you don't have actually any income coming in on a regular basis. A way around that is to, if you're doing a fundraiser, a lot of groups, what they'll do is they'll borrow the money first, get the project off the ground, and then fundraise to clear the loan repayments, okay? One way of getting in kind of regular income coming in is by doing a fundraiser where it's done by direct debit, like a direct debit program. So you identify maybe, let's say, you go back to the 250 euros donation for PAYE workers. You get maybe, let's say, 10 people on your committee. Find 10 people they know. So that's 100 people that will be found to give 250 euros per year to the project. But it's done by direct debit. So it's done monthly by direct debit. So it's 20 odd euros a month that they're giving in to. So 100 people giving 20 euros a month, let's say, is 2,000 euros coming into your account every month. But remember, if they're giving it as PAYE worker, you can claim the tax back. So at the end of the year, you're getting a lump sum from revenue back on top of that. So now you've got roughly what's that, 30 grand? Was it 3,000? Yeah, 24 grand. So if you had another, say, 20% of that, you're talking up to 30,000 euros coming in every year just through a direct debit program that you would have. Now, you might say, well, they're not going to give that direct debit every year for the rest of their lives. You might say for 2 years, and in 2 years' time, you replace them with another 100 people. So that 10 people find another 10 people. Okay, sounds like that's very unlikely to happen. But if you think about it and you break it down, if you're asking 10 people, can you afford to give 20 euros a month to this project? And an awful lot of people can, an awful lot of people can't, but a lot of people can. Okay, you're not asking for 250 euros out of their back pocket December 14th, which to say that's too much money, but if you ask them for 20 euros a month over 12 months, they'll do it. More often than not, they won't actually they'll forget about it, and they just basically auto-renew it next year. So try to build them in for 2 years. That shows you got repayment capacity because there's money coming in every month into the account. So if Concrete or the bank are looking at your bank statement and say, okay, well, hang on a second, there's money coming in every month. The same amount of money every month is coming in by direct debit. Where is that coming from? It's coming from our fundraisers. It's coming from a fundraising program. Now you got repayment capacity. Okay. If you go back to what I talked about the partners, if each partner is giving you 3 grand or 10 grand, whatever it is every year, that's sitting in an account and your loan repayments are coming out of that account. So you set up a separate current account, that money's going into it, and your loan's being repaid out of that current account. That's guaranteed. That's not guaranteed to come in, but it's in there and you're showing there's repayment capacity. So you need to look at how you're going to repay the loan. If you've no way of repaying the loan, just don't go for it. You won't get it anyway, but don't go for it in the first place. Security, again, I said, the social banks won't look for security from or guarantees from directors. They will look for security on the premises. And this gets a bit messy when you've got a large project, which is costing a lot of money, because the bank will look for security on the premises, but also your grant agency, your department, whatever government department it is, will also look for security on it. In other words, if you default and the project is, the building is half finished and you just walk away from it, who's got first charge on it. Now, that's usually a legal argument between both the banks and the government departments. There's normally terms and conditions involved in both, but something just be aware of. They would look for security on the property if it's a property project, but they won't look for guarantees from directors, which is really important. Tax incentives, then, as I said, are the first one, or the one that the most I suppose important one and the most common one is tax relief on donations to eligible charities. So if you go on to revenue.ie and you basically type in tax relief for donations to eligible charities, all the information on that will come up. Basically, as I said, what it means is that if someone gives you a PAYE worker gives you €250, minimum €250 in any 1 year, you can claim the tax back on what they paid at €250, depending on whether 20% tax or 40% tax. Okay, they can give you more than that if they want to. If they're feeling very frugal, can they give you €1,000? You claim the tax on €1,000. This goes back to my direct debit scheme thing, where this is fine if you're, it's not really worth it if you're only getting kind of dribs and drabs of €250 donations. You need to ramp this up big time. Okay, what we would normally do with a group is we hit the target. Let's say again, it's €100,000 target. If you're done with €100,000 target, and you're looking at €250 minimum donation, that's 400 people that's give you €250. Okay, in that year, that's a lot of people, right? So you take that out and say, okay, well, we target 200 people to give us €250 in that year as donation, and we look at the balance of that. Then we'll go after other, large fundraiser in the year, and we'll go after maybe corporate sponsors, right? So you're breaking it down in terms of how can I take this money we need and break that down into smaller manageable targets. So what we would normally do is say, okay, we'll target 30,000 with the fundraiser, we'll target 30,000 with the donations from through the tax relief scheme, and we'll target the balance through sponsors. Okay, that's how we would do it. So again, just in terms of this is only for PAYE workers, right? It's not if you go to a sole trader or someone self-employed, if they give you money, you can't claim that back because it's not PAYE. But so there's no benefit to you, but there is a benefit to the self-employed person, as I said earlier on. They can claim that donation to you as an allowable expense when you're doing a tax return. Okay, so if Tom O'Leary, PAYE worker, gives €250 to Adapt, Adapt can claim back the tax on the €250. If Tom O'Leary and Associates gives it, they can't claim anything back, but O'Leary and Associates can claim that €250 as an allowable expense. Okay, no harm to spell that out for the companies that you're going after, to show them that they can actually use it as an allowable expense. They should know it, but sometimes you got to spell it out for them. I would certainly recommend that if you're looking at bigger projects, look at this as an option. Your accountant that you're dealing with will know this inside out. If you have an accountant, but revenue anyway, it's very, very straightforward. You do have to apply for it. It's not something for everyone. You have to apply to become approved. Typically, sports clubs do it. Churches do it a lot as well. But again, it's open to anyone once you meet certain criteria. So it's worth looking at. There's not a huge amount of paperwork involved in it. There's a bit of administration involved in it, but it's not onerous for the return you get back on it. The funding calendar, then again, back to the calendars and plans. Again, we would look at your options throughout the year to bring in money. So we look at the grants. We'd write in on our like, and again, I would suggest you go off and buy one of those annual wall planners for this. And on the wall planner, you just basically fill in the details, so you can actually use it as a planner. And as the grants come up, you just mark them in when the deadlines are. So let's say the sports capital grant is, let's say it's May, for example. So you put in deadline, let's say the 1st of May, and then you say, okay, it's going to take us probably 2 or 3 months to get ready for that. So we'll start working back maybe February to get kind of all our ducks in a row for May. So we're ready. So you put a line back from May to February. So start date, February, deadline, May. Any other grants, the exact same thing. You might only have a short window. They might be only announced. You might only have 4-week turnaround time. That's fine. Again, so if you got a deadline in March and it's announced in February, and you got say 5 weeks, then you just basically, okay, deadline's here. Where it was announced in February, we call a meeting Monday and we say, okay, who's in position to put this thing together? over the next 4 or 5 weeks for us. So it's all planned. There's no like last minute rushing with it. Okay. Fundraising activities, same thing. If you're doing a golf classic, for example, it's weather dependent. You're not going to have a golf classic in December and January. You're not going to get a golf course in June, July, and August. So it's got to be in around those months, right? There's no point in organising a golf classic where you think the weather might be a bit dodgy because it's cancelled. All your efforts have gone to nothing. So again, you say, okay, if we're organising a golf classic in April, what team are we going to get involved to do it? Who's going to negotiate with the golf club? Who's going to sell tee boxes? Who's going to sell tee times? Who's going to promote it? Who's going to go on social media? There's a lot of work involved. So it might be a 4-month leading time to do it. When does it start? Who's involved? And again, what the deadline is. Right? It could be an annual social, flag day. When do we need to get permits? All this sort of stuff. It's all planned on a calendar. Okay, nothing fancy. Get a wall chart, wall planner in Eason's or online or wherever. There's loads of out there at the moment when it's a new year, and start fitting them in. Okay, really, really important you plan. Sponsorship again. When's the best time to go to company looking for sponsorship? This time of year? No. End of the year, they're stressed out. They're looking forward to Christmas. The last thing they want, someone knocking on the door saying, "Have you got money for us for X, Y, or Z?" They probably don't. You go to them when they're planning for the following year, when they're setting their budgets for next year. If you go to company and say, "Look, can you come on board as a partner with us?" They say, "Well, if you only came to us in October when we were looking at our budget for next year, we were looking at sponsorship as one of our marketing activities, and we left it out because we didn't have anyone to sponsor." No, if you came to us then, we could have included you in our marketing budget, and we could have put you down as a potential company or group we could sponsor and put a part of our marketing budget. So again, it's planning. Talk to them, ask them, when do you make decisions about your fundraising, your corporate social responsibility, your sponsorship program, your charitable program, when you're doing your budget. A small company like me or a local carpenter, tiler, plumber, farmer, whoever, they're not going to do this. They're not going to sit down as part of their annual budget and work out who we're going to sponsor next year because we're small. But large companies do. Some companies the larger, bigger companies have actually people that are responsible for sponsorship, for fundraising. They could be called, CSR managers and that, or they could be literally, community development, whatever it might be, whatever it is. There's a person there in some large organizations for it. Talk to them, go and talk to them. Ask them, when is the best time to target you? Not target's the wrong word to use. When's the best time to approach you for funding? When do you set your budget? That's when you talk to them. So now they can get it in the budget. No point talking to them after the budget's been signed off on. Again, you might look again towards when they're doing their tax return. Talk to them and say, even talk to their accountants, go around to different accountants and say, "Look, do you know any companies out there that are making a bucket load of cash and you want to do something with the cash and get some sort of relief on the donations?" It's not an investment, they're not getting any money back out of it, but they might be reducing their tax liability by giving some money over to you. Just be clever around this, really. But it's just going back to the planning. It's all planned out. It's all thought out. It's all very efficient, very effective, with a lot more return than the kind of panic, kind of, what do we do now? We've got this bill to pay and we don't know where the money's going to come from, And, that's where, people leave boards, they run away like mad, very fast away because they're just, it's all last minute kind of rush, no organization. So look, you don't need to be a financial guru, you don't need an accountant. It's simply using a couple of this template, the grants template, which ties into this as well, and the income expenditure template to set your targets. Okay. So look, think about your household budget. Up to Christmas, how much do you spend on toys? How much do you spend on food, on drink, on whatever, right? So how much we need to have in the account for December? And you say, okay, the wages are going to bring in some of it. Do we need to borrow money from the credit union to cover it, right? So we do this as a household, everyone does. The holiday in the summer when we can go back, holiday again. And, what do we need to have to cover the flights, accommodation, food, drink, entertaining the kids, whatever it might be. Where are we going to get that money? We put money aside, a couple of euros a month, just so there's money in the pot then ready for the holiday in August, September. We all plan for it. Kids going off to college, we plan for it, or we should plan for it, long term. You don't decide, Jesus, the kids start in college in September. Never thought about that. Off down to the banks, you can borrow 15 grand. It doesn't happen. You got to plan, you got to think about it logically. Same with every business. they do it. And you're a business, when it comes to fundraising, you're the exact same as a business, same as me. You know, I'm looking at next year, next quarter, quarter 1, 2022, quarter 2, 2022, have I enough money coming in to cover money going out? I don't wait for quarter 1, quarter 2. I have that started in November, December, because I can't risk it. Okay, you're the same, right? You need to go out and look at, when do we need to start planning for this? Where can we go for funding? And don't use the excuse that I don't know when the grants are, because as I've told you, I've given you the web, you know, you have these slides after today. Just go back to that one slide, take down the name of the websites, keep an eye on them. You have no excuse after that then, you know, when it comes to grants. The other things are up to yourselves and what you do. Again, the other thing you need to do as well is talk to other groups, other organizations, and ask them, how did you fund your projects? I sent an email to a guy this afternoon in Limerick County Council with Innovate Limerick, and they're funding a large-scale capital projects at the moment up there, enterprise centres and accelerator programs and all that kind of stuff. And I just bluntly said, can you give us an idea in terms of where you get all the money from to do all this work? You know, just ask them. He might tell me, I presume he will tell me, but he mightn't. But if he does, it means I don't have to spend days trying to figure it out, you know?
Tom, is it any advice on lotto funding? Is it a source of funding?
The lottery, for the national lottery funding, is it?
Mm.
Yeah, so the national lottery funding would be administered through the various, so like the sports capital grants, for example, are under our lotto.
Oh yeah.
Yeah. There is others as well that they're kind of administered down through various different departments, like, you know.
Oh, right.
Yeah. So that's national lottery. Then you have obviously local lottos as well that you're all familiar with, like, you know, like J clubs and sock clubs do their own local lottos. Where they're selling tickets for a local lotto, but the national lottery will be administered down through the various different schemes.
Departments.
Yeah.
Gotcha.
Exactly. And you know, they have a load of money in their pocket now because they haven't given out the jackpot in a long time. So we're hoping next year there'll be a windfall. Not being cynical or anything, but anyway. Yeah, so that's where they will come from. Okay, so just in terms of the last slide on the administration side of it, again, back to your planning, look at your finance committee. Make sure at the very least in your organization, you have a finance committee that is responsible for finances, because it's the most important thing. You might have a treasurer, or you really should have a treasurer, or you might have a paid administrator. Very important that you have an administrator or treasurer that has some sort of financial experience, that, you know, has an accounts background or bookkeeping background or just financial administration background, you know, because they need to understand finance, banking, reading financial reports. They need to be able to do all those things. Otherwise, you become one of wider in that position. Look at your spending approvals as well at board level. So what you need to get approved at board before you go off and spend money. Your signatories on checks, your online banking approvals, who's got authorization to make payments, to approve pays, things like that. Your financial reporting is a bit of a mess when it comes to not-for-profit organizations, because you have way more reporting to do than a normal business would have. Okay, so basically with your financial reporting for a not-for-profit organization, you'll be reporting to revenue. So your accountant will be doing up your annual accounts and sending them off to revenue if you're a company. They'll be sending your accounts off to the CRO as well if you're a company. You have your annual accounts that you need to do for your own board and for your members and for your community, which like your annual financial report, your treasurer's report, that'll be given out at your AGM. And then your funders. So each funder will have their own reporting requirements. So they have their own templates for financial reporting back to them on money spent. So if you're being funded by Pobble, by the HSC, by the County Council, by whoever it is, you have to submit a financial report to them in terms of how you're spending their money. Okay. If it's a like say HSC funding, like say Section 38 or Section 39 or Pobble funding, they can be fairly complex returns that they require. And to be honest, sometimes you can wonder, you know, who designed the spreadsheets that come up with it, because sometimes they're just overly complicated and they're a bit of a mess. But look, you have to do the returns that they look for. The charities regulator as well will look for their returns as well, their reports back to them. A lot of administration involved in that. It can be very daunting if you don't have proper procedures in place and proper kind of systems in place to keep records. So look at that. Look at your reserve policy. Your reserves policy will be how you spend your reserves. that normally would be maybe 6 months worth of reserves in the account to cover operational costs in the case of no money coming in. You might have a reserve policy to put towards a building project. So you're building up a fund that would provide matching funds for a building project. You might have transport, for example, and you're looking to replace a vehicle in 5 years' time. So you put money aside in a sinking fund for that. So you have to show that reserve policy. With the charities regulator, they will look for that reserve policy to be in your annual accounts. Your company accountant would have to put in that reserve policy into the accounts. You need to have a company accountant if you've got a company limited by guarantee. Your company accountant is not your financial manager. They're not your bookkeeper. They will do your annual accounts. They'll do your annual returns. If you ask them to do all the returns to the funders, which they will do, but they'll charge you a fortune for it, just don't land loads of administration work on them because you're paying more than you should be paying for that. If you've got a lot of administration and you don't have a full-time administrator, part-time administrator, look at the option of bringing, like, say, a local bookkeeper, for on a day rate, 1 day a week or 1 day every 2 weeks, just to do all the administration for you. If you've got a volunteer who's very good at it and likes this sort of work, absolutely fantastic, brilliant, they can do it as well. But your company accountant isn't the person that's going to manage your finances. They're not going to find grants for you. They're not going to fundraise for you. They're not going to manage your day-to-day spending. That's up to you and you only. Okay. And a lot of people think their company accountant is kind of their answer to everything. They're not. They're only part of the whole thing. I would always recommend that you have some sort of bookkeeping system in place. Some people don't use any sort of IT. They don't like it. That's fine. You can get ledgers and journals from Eason's or any decent stationery shop where you can actually manually put in money coming in, money going out. So you keep an record of your expenses, record of all your revenue coming in. So it can be done as simple as that. Some people use Excel spreadsheets. That's perfectly good as well. No problem whatsoever with that either. And then you go up to the next level where you can use, say, online bookkeeping software like businesses would use. The one I use at the moment is Surf Accounts. It's an Irish company. The reason I use it is because it's easy to use and it's linked to revenue. Now, that's not really relevant to you if you're not doing payroll or anything like that or VAT returns. Bullet HQ is another online software, cloud-based software that's available. It's another Irish company, also linked to revenue. Sort My Books is a local-based company based out of Killarney. Katie Eisen from Killarney, again, very, very good bookkeeping software. And then you got the bigger ones like Sage, Big Red Books, all those. They're very useful from the point of view that where you can input all your details, like your expenses, so all your bills you're paying out, any revenue coming in, you can put them into those as well. Now, obviously, you got someone to put in the data into them, so you got someone there actually inputting the details in there into the account. But it's a very good way of generating reports because they've all got automated reporting, so you can generate income expenditure accounts quickly, profit and loss accounts quickly, balance sheets quickly. If you've got, say, creditors or debtors, you can print off those as well. Now, some of this might be relevant to a lot of organizations, small organizations. Certainly, if you've got a company structure with staff, and you've got a lot of expenses and a lot of different kind of operational costs, certainly use some sort of bookkeeping software, just purely to keep records, and it's really, really important. It's probably more important for a not-for-profit organization of proper record keeping than a private company like mine. The reason being is that you're going to have so many returns to do to the various different funders. You will need to have that very well structured that you can actually pull out information that's relevant to each one. So we're working with a group at the moment. They have HSE funding, they've got public funding, they've dormant accounts funding, they have sponsorship, they have fundraising, and they've got fees, right? All different sources of income. They have to split those all out because the funders only want to know what they've spent in relation to their grant. So all their costs are split, all the revenue split. It's a bloody nightmare for the administrator, but she's very, very good at what she does. So from their point of view, they're lucky. But it can be very, very complex if you don't have a good system in place of monitoring and recording, record keeping. It's going to be a mess. If it's a mess, your reports come back to your funders and to revenue will be a mess. Now you're in serious problems down the line when it comes to getting money. Your funders will not want to deal with you afterwards. If your admin is poor and you're difficult to deal with because you're just reporting all over the place, they're not going to be, jump up and down to fund you next time around. So just make sure that's right. As I said, volunteers out there, a lot of people that are retired that have good financial backgrounds who are looking to get involved in doing some kind of sideline work, either for free on a voluntary basis and are capable. There's an awful lot of bookkeepers out there, freelance bookkeepers that will charge, an hourly rate, bring them in 1 day a week. They know what they're doing. You don't need someone every day to do this unless you've got a big organization. Most smaller organizations, day a week would be plenty, but it's just done right. It's very, very important. So that's kind of the administration side of it. Certainly have a finance committee. If it's large scale projects, have a separate fundraising committee as well. That's represented. So the representative from the finance committee is sitting on that because they're obviously going to be talking to each other. And you might have a fundraising committee just for a specific fundraiser or a specific project. It might be lasting 3 months and then just it goes away then until the next time around and comes back again when it needs to. But certainly, as a minimum, finance committee, and as a minimum, you need to have a treasurer or an administrator. Okay, funding is crucial. Nothing like it's the diesel that runs the engine. So without it, it won't run. Okay, so that's I'm sorry, going over time by about 15 minutes, but there's a lot to cover. So just to stop the share there. Just any questions on any of that? Does it make sense to you in terms of that if you keep it simple and practical, it's not as horrific as it might seem?
Yeah, absolutely. Yeah.
Okay.
Yeah, no, it makes sense.
Yeah.
Yeah.
Okay. Anyone of you like in the next I suppose next couple of months you can be all doing grant applications, because I don't know, but I would be very surprised from mid-January onwards. We're not going to see kind of another wave of grants coming through because of COVID again. It's to be the only silver lining, if you even call it that, with COVID. There is funding available alongside it, and it looks like the government is gearing up for more spending. In the next probably number of months to soften the blow of what's coming ahead. So I would certainly recommend that have a look at the slides I sent you this evening, or I'll be sending you tomorrow, or aiming to send out tomorrow. If you have any questions on it, let me know. Email me, say, Tom, what should we do here and here and here. But the key thing I would say is be shovel ready. What I use is shovel ready. That's just a term I use. Be ready to be able to pounce on those grants when they become available. With the COVID grants that happened last year, there was a very, very short window to get those grants applications in, because they were last minute kind of stuff the government fired out there. That's a good and a bad thing, but you need to start identifying projects and listing them, stuff that we need to do over the next 6 months. Start listing them, it might be equipment, might be materials, might be whatever it is. And say, okay, we're ready now. Once the grant is available, we're ready to go with that, this, and this, and this, and this. Start getting quotations from them. Start getting all the paperwork ready, so you'll be ready to turn them on really, really quickly. And if you do, you better maximize those grants that are coming forward. As I said, we're working with organizations like last year. They brought in massive money. Like ever thought last year that the groups would be down, an awful lot in terms of funding because of fundraising being cut. Because all the grants came in, an awful lot of groups I work with had more money last year than they ever had.
Yeah.
Which is mind-boggling, but that's where it was. But they were ready. They had someone literally waiting there, waiting for the email to come in and ready to pounce on it, and they just maximized the grants that were available. So just be ready for that. And again, this time of year, okay, next week we'll probably do nothing, but certainly first week in January, if I were you, I'd be sitting down and getting ready for the next 12 months, which could be an onslaught. And then God knows after that, then what's going to happen. Could be.
And we have the other training as well, Tom, coming up in January,
exactly.
which will also kind of support the following on from the strategic planning and then the financial planning, because we have the training on the grant applications and the whole charity regulation and governance training as well. So we'll have those going out in the newsletter on Friday, and then we'll have the registration details following on in January then as well.
Brilliant. Very good. Fantastic. So any final questions? Are you all okay?
Tom, excuse me, what was the name of you said the generic grant template?
No, it's basically if you've done an application before, John, say a grant application, hold on to it and use that then as your template going forward, because it's the same information as probably most of them,
but did you say there was one?
There's one I have that I use. I can send you out.
Yes. Okay.
Yeah. No, it's actually grant. It's a dummy application for. I think it's just I go back to know again. I can't remember which one. I think it was for CSP program. I think
it'd be handy.
Yeah.
Did you say Pobble was a particularly difficult one?
Yeah. No? Pobble's grant applications can be complex. Yeah.
Yeah.
I'm convinced of someone in public, like, sorry, not saying from public, convinced someone from public in an office somewhere saying how to make this hard for people.
Yeah.
Because sometimes it can be very complex. Like,
yeah, but it'd be worth having a look at to see how bad things can get. Yeah.
That's the, you kind of go for the nuclear option. If you can get over that, then you can over the rest of them. Yeah, I can send you on that template. Yeah, it's I need to update it a bit though, because it's probably outdated now at this stage. But I'll send you on the slides first anyway, and then I'll send you on those are templates are just the standard enough Excel templates I can send you on.
That'd be great.
Thanks, Tom.
Yep, no problem. Excellent. Okay.
Lovely.
Very
Okay,
good.
thank you all very much for staying with us. And
Thank you,
thanks a
Tom.
million, Tom, for the presentation and the wonderful information. And just to wish you all a very Merry Christmas
Happy
and
Christmas, everyone. Be safe.
Happy New Year.
Yeah.
Okay.
Take care.
Thank you.
Thank you.
Bye.
Bye-bye.
Bye. Bye.